The market is rigged in our advantage because we can see the world changing in a way that people that work on Wall Street just can't.
70 record closing highs so far for the Dow.
It's not about being really smart. It's about being smart in a totally different way than others.
The market has gained almost $3 trillion in value since the election.
Big changes that are happening quickly are the biggest opportunities for investors, but they don't happen very often. And occasionally there's one that comes around once in a lifetime, and this is it for me. This is the biggest trade of my life. I firmly believe that the embodiment of artificial intelligence is going to radically rebuild our world and change our economy unlike we've ever seen in our lifetime. Think about what it's like to have access to infinite physical labor. What would we build? How would that change our world? There's nothing more important than being part of the investor class. It's not a question. You better darn start investing right now. You better go get a Robinhood account or get whatever, right? Just start doing it. I promise you.
Chris, thank you so much for coming on the Iced Coffee Hour. Really appreciate it.
Yeah, been wanting to do it for a while.
So question number one, why do so many investors lose money?
Maybe since the pandemic, this new generation of investors that are all about FOMOing and weird crypto meme coins and meme stocks. And you have like these new asset classes that are super risky options, right? So like, I think if you remove that from the investment class, I think if you remove those things, it's very hard to lose money.
I guess what we're seeing on our end is a lot of people making these speculative trades where they're going in and buying something because it's hyped up. They're buying at the peak and then it drops. You're like, crap, I got the wrong one. Sell, lock in a loss, move on to the next one.
Probably either one really young or relatively new to investing, okay? They're going to go through that period and it's going to be a costly short period of their life, months to a few years. They're going to learn those lessons. Sometimes like you can read all the books and you could listen to us talking about what not to do, but you just have to go through it yourself, right? And I think every investor has to go through a period of making critical mistakes because everyone wants fast money. I get that. That's the answer to your question. They're chasing fast money.
What does your portfolio look like today?
Dude, my portfolio is wild today, but it's not normal. This is not a normal period for me.
Sure.
And you follow me a little bit, so you know that every decade or so, there's like a generational opportunity. If the change is happening really quickly, then there's even a bigger opportunity. So big changes that are happening quickly are the biggest opportunities for investors, but they don't happen very often. So you go back late 90s, after I graduated college, the dot-com boom, that was one of those times, right? And the birth of the smartphone, that was one of those times. Cloud computing, another one of those times. And certainly there's I just turned 50, guys, like a couple months ago. And I never thought I would see in my lifetime this much change that is this big, like as humanity, this quickly. It's freaking wild to me. Actually, during the pandemic, when COVID hit, that was my biggest year. Everyone knows that because it was the biggest change that had ever happened to our civilization and during our lifetimes, right? When you take every human on earth and they start not leaving their home, that changes the things that they buy, changes the things that they do with their money, the things that they care about, which changes the profits for every company on earth, right? And that was a huge opportunity to monetize. I didn't think I'd ever see that again. This is bigger. The age of artificial intelligence, the age of robots. This is freaking wild.
So is this a way to say that your portfolio is skewed heavily towards what you believe is a once-in-a-decade opportunity?
Yeah, maybe once in a lifetime at this point. Yeah. And so like, I'm really putting myself out there. Like, dude, I went all in when ChatGPT first came out. Do you remember the first time you got on ChatGPT?
When was that? 2 years ago? A year ago, give or take?
I got on ChatGPT and I do this. And I remember this because I remember the first time I held an iPhone in my hand.
Yeah.
I remember exactly where I was and it wasn't mine. They were passing it around at a pool party and it was like the week the iPhone came out and I spent like 5 minutes on it. And I was like, oh, this is something. This is something. And I made the most levered investment of my life in Apple at the time, and it paid off, obviously. And when I got on ChatGPT for the first time, I was like, dude, this is something real. And I'll never forget it because Dave was out of town. and Jordan wasn't. I was like, Jordan, I don't know how to get the YouTube show up because Dave does all that stuff, right? So I was like, I don't know how to get Dumb Money up. And I was like, but I can get a Twitter Spaces up. We got to get one up today. I just got to talk to people who've been on this. And I got to start evaluating opportunities. And so we got on a Twitter Spaces, and I think it went on for like 2.5 hours. And we were just openly talking to people that were using ChatGPT and just basically going through like a creative session of who would win from this, who would lose from this. Like, I was like, I didn't know how much time we had before the rest of the market figured this out. It could be a day, a week, a month, but I had to figure it out quick. Because if there were a couple companies that were obvious beneficiaries and I could detect those companies before anyone else, that could be a life-changing thing. So we had that Twitter Spaces, and it was awesome. Like, I had people that were using it at call centers, and I had a guy who's like, hey, I've been in call centers for 20 years. We started using it a couple of weeks ago. Game changer. It's going to take over everything. Our entire industry is going to collapse and like get taken over by these automated kind of AI answer bots. And so we just kind of brainstormed, and I ultimately made a decision, and I did an episode on this on Dumb Money. I was like, NVIDIA. It's the only thing I could think of for sure. I just said, this is it. I'm going all in on NVIDIA. That was like January of 23.
What do you mean,
Like,
what do you mean by all in?
Yeah. So when I'm all in, like a big part of my portfolio was in NVIDIA. Now, I didn't leverage that much. And the reason why I didn't go in levered is because I was unsure the degree to which the rest of the market would like pick up on that over a known period of time. So when I'm trading an option, options have, windows, and something has to happen within that time period. So you could be right, but if the rest of the world doesn't kind of come to terms with that thing that you found and agree with you within that short window of time, then it doesn't really matter. So my regret is, I didn't go in levered. I just went in really. That's
your regret? Is you didn't go in?
I didn't go in levered. You don't know me, man. I will put, like, I've talked about this, like right now, like, dude, if you were to see my account the last week, you wouldn't even believe it. It's just
Can you tell us?
Yeah, I mean, I've been heavily levered in Tesla for the last month, heavily, like ridiculously, irresponsibly levered.
But okay, I'm curious though. Like, when I hear that, I think that could be anywhere from like 15% of your net worth to it could be
okay.
50.
Are we talking like 10 million plus?
So I have a liquid trading account. Okay. Most of my assets are tied up in privates, right? So I'm invested in like over 100 private companies and startups. I also have operating businesses that I'm invested in. And then any excess returns I get, I basically donate to my foundation. I have a foundation that benefits, pediatric cancer, autism, leukemia, and animal welfare. And that's another big part of my life. I'm trying to grow that into $1 billion foundation. So I put millions of dollars into that foundation when I have a good year. But my liquid trading account, like, is not that, I mean, it could be a high 7-figure to low 8-figure account at any moment in time, right? And so I've had like 20% of the account in options that would go to zero the next day if it didn't go my way. So we're talking about millions of dollars in options that could go to zero in one day. And it started out as like 300,000 in options, but then it's 2 million 2 days later, So it's wild to see your account going up like that.
How did you make your money? Could you take us back to the beginning, like how you even got started doing something like this? Oh, sorry,
yeah. So I mean, I've been investing since I was like 13 years old. I was like a nerdy finance kid that before that existed. Now it's common.
Yeah.
Like, now kids do this. This is like cool to be a financial hustler as a kid. Not in the 80s, man. Not in the 80s and not in the 90s when I grew up. I was the only one. I was literally the only one. I tell stories about I would hang out, like kids now hang out in like boards of, like amongst people that have like interest. That was my like interest was investing. And there were web boards like Yahoo web boards in the early days of Yahoo web boards for finance. And you would post a message and I'd just sit there all night and wait for someone to respond and post another message. Could you imagine?
Mm-hmm. I used to do that on Aquarium
you know what it's like on like StockTwits now or X when you put a message on Tesla and there's like 10,000. I would literally post a message with like my thesis. And I'd be like, here's my thesis, on this stock. And I just wait. And the next morning I would wake up and the first thing I would do is pull up that message board and go, oh man, 2 people commented on my thesis. Dude, this is huge. That's how hard it was to be like in a retail investor, a self-directed investor. We didn't exist. But I was investing since I was 13. And that's why how I developed this whole concept of what I call social arb investing, right? Which is, I wrote a book about it in 2010 called Laughing at Wall Street. But it's all about detecting change in the world and then connecting dots between that change and the companies that would benefit or be harmed by that change. You want to surface the change quicker than others, and then you want to connect the dots to the benefiting companies really quickly. And there are more elements to it than that. You have to make sure that the rest of the world doesn't already know about that thing that you discovered. When I say the rest of the world, I mean Wall Street and other retail investors. You want to make sure that there's nothing else happening at that company that could be more impactful than the piece of information that you think is going to impact that company positively or negatively. You also want to make sure that that information that you think is going to impact that company is actually meaningful. It's a needle mover, right? So I always tell like the same stories because they're super relatable. Stories like, 10 years ago when kids started playing with DIY slime, they would make slime in their house, right? And that became a really popular trend. And I was able to surface that trend pretty quickly when it was happening. And so I was like, oh, this is big. Like every kid in the world is making slime with their moms and in their house and playing with it. Well, like, how do you make this stuff? Oh, the primary ingredient is Elmer's glue. That's interesting. So who makes Elmer's glue? Newell Brands. Oh, they're public. Oh, that's interesting. Oh, this is a stodgy old company that grows at like 2.5% a year, and Elmer's glue is roughly 2.5% of their revenue line. Okay, so like how much are they going to grow Elmer's glue? Oh, Elmer's glue hasn't really grown in 40 years, but now it's sold out in every store around the world. Literally sold out in every single store around the world. So you have to assume they're ramping up production of Elmer's glue. So earnings were, a few weeks later, and this trend had been going on for a couple months now, or a few months, had been ramping up. So I traded Newell Brands via stock options, and sure enough, the company had like its biggest earnings like ever in recent history because Elmer's glue sales were up, I think, like 60%, which doesn't sound like a lot, but for a company that's only growing at 2.5% a year, when you have a 2.5% revenue division that's up 60%, that's a big deal. So the stock was up 17%. Now that doesn't sound like a lot, but you have to remember that this was a stodgy company and the option premiums were like that big only because no one was trading options.
Some poor soul was probably just selling calls thinking he's, nothing's going to happen.
Nothing, the stock never jumps.
I'll be fine.
The stock never jumps on earnings,
Someone actually bought my option.
But the story that goes all the way back to my childhood was, I was always a hustler. I would do garage sales on the weekends. Like this is way before Gary Vee was talking about garage sales. I would I would literally take the bus around the city of Dallas at like 5 a.m. I would study the sales in the newspaper the night before. I would literally study the sales, and I knew that garage sales were managed by women.
Although really quick, before we go into that, are you looking at cutting costs and improving your business's bottom line? Well, the best business operators have turned to our sponsor, Ramp, to help them cut down on wasteful spending and improve their finance operations.
Ramp is the corporate card and spend management software designed to help you save time and put money back in your pocket. With Ramp, spend policies are built into the card to control spending before it even happens. It automatically collects and categorizes receipts, so you'll never have to chase them down again. Plus, Ramp enforces compliance by flagging violations and locking cards for non-compliance. Basically saying if Graham wants to use the Iced Coffee Hour company card to go buy himself some coral for his reef aquarium, he'll be flagged and his card will be locked. So don't do it, Graham.
Ramp also helps streamline your entire financial workflow from expense reporting, vendor payments, and reimbursements all in one place. Plus, businesses save an average of 5% in their first year with Ramp. Not to mention, you could get $250 when you join Ramp. All you got to do is go to ramp.com/ICH to claim your offer. Again, that's ramp.com/ICH. ramp.com/ICH with the link down below in the description.
Cards issued by Sutton Bank, member FDIC, terms and conditions apply. Thank you to Ramp for sponsoring this episode, and back to the podcast.
I would literally study the sales, and I knew that garage sales were managed by women, older women, and they were really good at pricing jewelry and antiques and stuff like that. But any item that was male-oriented, like train sets or baseball cards or watches or like anything that was male-oriented, they just kind of discarded and didn't care about because it wasn't like up their alley. They didn't really understand it. This is pre-eBay when you didn't know what things were worth unless you had like a price list in a book and you would look it up to see what it's worth. So I would look for garage sales that listed items that were male-oriented, knowing that they were more likely to be mispriced at the estate sale or the garage sale. And I would then take the bus, and you could usually only get one sale in to be first at, because you had to be first. So I would get there at 5 a.m. and just sit outside the house until they opened up. And, sometimes I hit nothing. Sometimes I would hit stuff. I'd start every morning at the 7-Eleven. I would get Snapple flavored iced tea because it was really early in the morning. I want to wake up. I didn't drink coffee as a kid. So that was like 13, 14 years old. And one morning I walked in the 7-Eleven. They didn't have any lemon flavored Snapple iced tea, which is what I used to get. And I was like, what's going on? He's like, well, instead of having 2 full refrigerators of Snapple, this is back in the day when Snapple was everything. There was only half of one door of Snapple. He's like, there's competitors now, Arizona, other iced teas. He's like, that's all we're going to have from now on. So I went home, talked to my older brother, who's a stockbroker. I was like, can I make money on this? He's like, well, maybe. He's like, and he taught me how to short Snapple through put options, right? And so I had $300 saved up from all these garage sale trades I'd done. I gave him the $300 in cash. I said, can you do that for me? He said, yeah, I'll buy some puts on Snapple. They have earnings in a few weeks, whatever. So he bought the puts, and Snapple was one of the hottest companies in the world at the time. That was the first earnings. They missed earnings because it said inventory was building up in the channel because retailers were not giving them as much shelf space. So I was a 13, 14-year-old kid that saw something that people working on Wall Street didn't even see. And that stayed with me. I was like, how did I see that as a kid, just going into 7-Eleven? How did the guys that work on Wall Street that manage billions of dollars, how did they not see that? It's just so right in front of your face. And what I realized was that people that work in the financial industry, their brains aren't tuned to like see things like that. They're focused on financials. They're focused on technicals sometimes. They're part of a herd mentality, and they all kind of live in one area of the country, or at least they did back then. Mm-hmm. They were mostly male, and they mostly thought one way. So there were lots of opportunities to see things in areas of life that they weren't really focused on, that they would miss. So the same way that I would look for male-oriented items at garage sales, I spent a lot of time in my early years trying to detect change with female-oriented trends and products and brands, or brands that were young or youthful, because an old white guy on Wall Street didn't really pay attention to things that were youthful or female or things that started trending in the middle of the country. So I remember some of my big trades from back in the day were like P.F. Chang's or Cheesecake Factory, because think about a guy who lives in Manhattan. He just never seen a P.F. Chang's. He doesn't understand the degree of buzz that was happening in places like Texas when there were people were eating Chinese food for the first time, right? Or thought they were eating Chinese food. Like, he didn't understand there was like a 3-hour wait to get in that place. They didn't understand how big of a deal that was, that they would be able to open hundreds and thousands of these places, and every one would be exactly like that with 3-hour waits. They thought it was probably a fad, but no, like people outside of these cosmopolitan regions had never had Chinese food. So it's all about, I always say it's not about being really smart. It's about being smart in a totally different way than others. That's what pays dividends.
And then what job did you get that you worked at for a while to then go into investing full time? And after that, what were some of the most pivotal trades that you've made in your entire life? I love the stories. Yeah. Maybe like a big swing one and a big, positive swing and negative swing.
Yeah, I mean, so like I traded a lot as a young kid, and I was having fun with it. It was kind of a bit of a gambler. I was trading options. I was trading through college when I was at SMU, and then I kind of, you go through a life where you start doing other things, and you just get distracted. And that's what happened to me. Like, I just stopped trading for a while. I just wasn't interested. And it wasn't until, I guess, my mid to late 20s when I was having a real life with a wife and planning a family and wanting things, big things like houses and stuff like that, and thinking about my retirement. And like, you grow up and you're like, dude, life is expensive. And I was working just a normal job. I mean, my job was at a tech company. I was helping to build the world's first online research panel. I helped build a company called eRewards that ended up controlling about 1/3 of all the research panel in the world, meaning anytime someone's doing a study, someone has to answer that study. And we basically took research panels and moved them online. But it was, at the end of the day, it was just a job. I was making good money. I was making like $200,000 a year.
That's fantastic.
Yeah.
When was this?
This is in like the mid 2000s, early to mid 2000s.
I mean,
Okay.
that's an incredible income.
Yeah.
At that
Yeah, but I had accelerated my career. I was a bit of a hustler in my career as well, right? So I climbed the ladder pretty quick, and I was a sales guy and a biz dev guy, and I just, I was a serious person, right? Like I just, for better or worse, like whatever I'm doing in my life, I'm serious about it, and I'm pretty aggressive. And so I was aggressive with my career, and I was doing well, but I still wasn't doing as well as I wanted to do. I want to do way better than that. I was like, there's no way I can really climb this career any further. It was really tough. I was getting frustrated because, I was looking at guys around me who were like C-level. I was like, I should be making that much money. I should be making $1 million a year. I was looking at guys on Wall Street going, I should be making $1 million, $2 million a year. But it's hard when you're in a career, and that's what I'm talking about when it comes to the income gap. I was in a good place, but for most people, but not for me. A lot of people are in that same situation, but instead of making $200K a year, they're making 60 or 70 or 80 or 30.
Mm-hmm.
And quite honestly, they didn't have the privileges that I had in my life. I grew up in a great family, wealthy neighborhood. I had access to all kinds of smart people, and I could take risk. Most people just don't have the ability to escape. They don't have that escape velocity. There's no way to escape whatever your income is, whatever your profession is. So the only way for me to escape it was through the market, and I knew that. I was like, in the market, I can do whatever I want. I could be whoever I want. I could like have a job that pays me this much, but I can make this much in the market. I started with $20,000. I actually had $87,000 to my name, and I took $20,000 of the $87,000. I said, I'm going to take this $20,000 and I'm going to do the type of trading I did when I was a kid, just trying to connect dots, look at change and connect dots. I'm not looking at financials. I'm not looking at technicals. By the way, I'd read every investment book as a kid, every single one. I was like, none of that stuff's for me. I tried it all. I tried investing in commodities. I used to go to a commodity store and I would buy silver bricks of silver and read the silver price and I'm like, screw this. I've been in this for 9 months. I'm up $5. I sold back to the store. Commodities not for me, right? I went through every type of trading, technicals. I was like, this is boring. I can't look at these charts all day. I'm like, this is just it's not my temperament, man. I don't want to live my life like that. Looking at computer screens and charts, this is not me. So I was like, I had to find something that worked, that I was going to have enough fun with to get serious with. So I was like, I'm going to do it. I'm going to see if I can do it. I started with 20,000. And then there was this thing called Covestor. Covestor was the world's first portfolio tracking service. And they tracked like 45,000 accounts. A lot of them were ex-hedge fund guys. You would load up your account and they would see how well you're doing. You competed against real traders around the world. This was back in the 2000s,
Wow.
a long time ago. Well, sure enough, I was doing pretty well. I turned that $20,000, like I'll never forget this. I turned into like, oh my gosh, I was like at 400,000. I was like, 20,000. I was like, I have 400,000. I remember going to my buddy Patrick, who's my best friend who worked at the same company. I said, I'm going to turn this into $1 million someday. Like 3 months later, it was $1 million. With my trading, it was crazy. And then a little bit later, it was 2 million.
No.
And so I became the number one investor on Covestor in the world. That was the tracking. And then I got a bunch of media attention for it. And I was like on the news. I was on like Fox Business talking about it. And then I got a book deal to write a book about this methodology, how I turned 20,000 to 2 million in 2 years. And I said, this is it. I got $2 million. I'm done. I'm done working. I'm quitting my job. I quit. I was done. Like, I'm never working again. And I said, I'm going to take the year off and write the book. So I took the year off. I was having twins that year. My wife was pregnant with twins. And I worked out of a Starbucks. Every day I go to Starbucks and I'd write my book every day for a full year. And I wrote the book, and it's called Laughing at Wall Street. It came out in like 2010. And it's all about my life and how I got there and all the stories of all the trades that got me. I literally talked about all the big trades that got me there. Trades like Uggs, trades like Crocs. Back in the day, all this, what do you call it? What's the jean company? True Religion? Is it like all these old school companies back then? They were
Ed
all
Hardy.
It was all like female and youth, heavy female, heavy youth trends. I was picking up on all these trends a little bit quicker than other people, connecting the dots and all stupid, simple stuff that an idiot could see. Like there was nothing sophisticated about anything that I did. No, I'm just like a big idiot at the end of the day. Like there's nothing I'm aggressive. I'm resourceful. like I think big, but like I barely passed high school, guys. Like I was the bottom quartile of my high school class. I've always been a little bit off in the way that my mind works. And I just like, I never could figure like books and stuff, and just, it was never my work. Like if you give me something I'm interested in, I'm all in. Today, as you know, I told you, like I'm up from 10 p.m. to 2 to 3 a.m. every night of the year. All I do is social research. All I'm doing is reading comments on TikTok videos, looking for the next thing that's trending. That's literally all I do every night, 7 nights a week, Friday, Saturday, Sunday, Monday, Tuesday, everything. So I had all these big trades, man. And it just, before you knew it, yeah, I mean, it just kept growing and growing, and it's never stopped. And I'm on my 18th year of social arb trading. And I know this is so hard to believe. I don't believe it myself. Every year I say to myself, the last year was the last year that this is going to happen. And like, it happened again, and it's happening again this year. My account's up like 100% again this year.
Even if you think it's a bit overhyped, AI is suddenly everywhere, from self-driving cars to molecular medicine to business efficiency. And if it's not in your industry yet, I guarantee you it will be very soon.
But AI needs a lot of speed and processing power. So how do you compete without your costs spiraling out of control? Well, that's why it's time to upgrade to the next generation of the cloud, Oracle Cloud Infrastructure, or our sponsor, OCI. For those unaware, OCI is a blazing fast and secure platform for your infrastructure, database, application development, plus all of your AI and machine learning workloads. OCI also costs 50% less for compute and 80% less for networking, so you're saving a ton of money. Thousands of businesses have already upgraded to OCI, including Vodafone, Thomson Reuters, and Suno AI. And right now, Oracle is offering to cut your current cloud bill in half when you move to OCI. This is for new US customers with minimum financial commitment, and the offer ends March 31st. So see if your company qualifies for this special offer at oracle.com/iced. Again, it's oracle.com/iced with the link down below in the description. Thank you so much. And now let's get back to the podcast.
It happened during the pandemic. You guys know the pandemic. I talk about this publicly, so I'll talk about this. Yeah. So I made $30 million the year of the pandemic trading starting with an account that had 4 million in it. So I turned 4 million into like 34 million or something like that, or like I was up 35 million at one point. But it was because I was converting Chinese newspapers and medical reports. I was using Google Translate on every single person in China that was in the medical industry talking about COVID when it was breaking out over there. And I became obsessed. I was like, this is it. This is the big one. This is the one I've been waiting for my whole life. Not like happy that we have a global virus, right? But I was like, I knew that things happen really big that the world just cannot mentally grasp until it's, right in front of their face. And if you can capture a little bit early, these things only come around so often. AI is one of them, right? Robots, but at the time it was COVID. So I took like 10% of my account buying weekly puts, and I lost all my money every week for like 3 weeks. I lost 30% of my net worth in 3 weeks because the market wouldn't move. I was like, this is crazy. A virus is about to literally stop the entire world as we know it. We're about to have our first pandemic of our generation, of our lifetime. We never knew this was possible. The market's going to crash, and it didn't crash. And no one's talking about it. I'm like, why is no one seeing this? Why is no one seeing this? And I remember like CNBC had this episode, the first day that the market dipped 2%. And I was watching CNBC, and I never watched CNBC, only to see when they would see what I was seeing and start talking about it. And all the guys on like Fast Money were all like, this is the moment we've been waiting for. The market dropped 2%. Here's your chance to get in the market cheap. Wow. I was like, what? The market was like breaking all-time highs. It dipped 2%. And their reaction was, what an opportunity to buy more. I'm like, I almost put my fist through the television because I was going to go broke if this happened a few more weeks. So I just got to stick with it. I did it again, weeklies. Another way. And I was basically buying puts on the S&P, and I was buying puts on casino stocks and airlines. Whoa. So it's casino stocks, airlines, and then the S&P at large. And then when it hit, and man, it hit. And so it was like it hit. And I know I feel terrible talking about this in a positive way because it's like the most devastating thing. It's like in my mind, I'm like, I can't do anything about the pandemic, but I can make money and then use that money in a good way to help people. And that's what my life is about. That's why I put all my money in the foundation, right? To help kids. But like, I was like, I'm going to make a lot of money. Like with money comes power, comes leverage to do good in the world. That's my whole philosophy. So yeah, it hit big. And the money was insane. It was big, way bigger than what you just saw, like on a daily basis.
Holy crap.
And then the craziest part was the whole time I was like, this is wild, because there's like 15 companies where this is actually a good thing, not a bad thing. Shopify, Amazon, Peloton, companies that make anything that would be advantageous to people that don't leave their homes anymore. You know what I'm saying?
Yeah.
Like, RVs, RV companies and pet company, and all the stuff that ended up booming because of the work from home. But I was like, it's too early. The world doesn't see it. So I had all these companies ready to go, and I was going to buy call options on all of them. But I was like, I can't do it until people are like flushing this trade out. And I waited 2 days after the market bottomed, when it started to come back up. I was like, I think it's time. And so I put on all my long trades. I got on my short, put on all my long trades. And that's when it got really nuts. And it's like,
what would you say your biggest dollar amount day is?
Back then, a few $1 million, $3 million in a day or something like that. Yeah. But for an account that was started off at like 4 million, like at the beginning of the year, the account was 4 million, 4.5 million. So it was crazy. And then I made it. And then the worst part is, after that year, it messed with my head and I went a little crazy. And you know this, because I had dinner with you shortly afterwards.
You were telling us about.
All right. Let me just say, it is what it is. So I'm going to put it out there. I got into NFTs, okay? We all went a little crazy during the pandemic. We all go crazy in our own ways, okay? I went nuts because I joined this text group and a lot of really interesting people. It all started with that, Logan Paul was on a chain with Gary Vee and about 12 other guys that bought CryptoPunks. Mm-hmm. And one of my buddies was on that. As soon as they got off of that, he texted our group and he was like, guys, I just got off this crazy Zoom with Gary Vee. And we're all buying CryptoPunks. I was like, I want to buy a CryptoPunk. And so I bought my CryptoPunk, and then it just went nuts, the whole NFT. And I bought all these NFT projects early, and it went nuts. And I just got addicted. It was fun. We were all stuck at home during the pandemic, and I had this really cool group of like really interesting people, and we all got into NFTs together, and we were talking about them at 2, 4 in the morning. We were just having fun with it. It was like little mini communities. It was one of the funnest things I had done since I was a kid. Like little pieces of art that were kind of investable, and we're all kind of mentally insane from the pandemic anyway, and like nothing was real. I didn't know, there were meme coins, there was GameStop. Like I was like, this is the future of art, and like I went in deep, and I ended up actually not losing money, believe it or not, because I actually sold most of those NFTs relatively close to the peak, because I saw what was happening to the market. It was a liquidity issue. You have to have additional liquidity, and when I realized that Coinbase, their NFT marketplace, wasn't really anything that anyone was going to do, it's like, I gotta get out of this. The problem was I was so consumed by NFTs that I missed the entire like reversal of that market the next year, and I held on to some of those positions too long, and I wasn't shorting the market where I definitely would have been if I wasn't so distracted. And I probably lost $100 million that I could have made that year, I think. So, and I also did, I had this concept of working with the creator economy to build real businesses, and I partnered with this ice cream kid, Dylan.
I remember that.
Yeah, I poured millions of dollars into doing a super fun ice cream shop in Manhattan, and for various reasons, like a multitude of reasons that were out of our control, that business didn't work. But it's not about the money I lost in that business; it's about my time. So I became really distracted for about 1.5 to 2 years. And it was a critical 2 years when I could have really killed it. And after that whole experience, I said, that's it. I'm back. I'm not letting anything else distract me. In fact, I said, I'm not investing in startups anymore for the most part. Like, because I used to I'm in almost 150 startup investments, right? I was like, too much of my time. I'm going all back into the thing I'm great at. I have a 17-year track record of like 70+% annualized returns in the market. What am I doing anything else but that? It had to be insane, right? Like, why would I do anything but that? And so I got back in it, and I've been back in it now for a couple of years, and I've had 2 of the best years in my trading. It's wild. It's been wild. And you know what? I love it so much because I'm re-engaging with my community again. And there's like, I have thousands, we have 50,000 in our Discord, like thousands of people that do this type of trading, social arb trading that I kind of wrote a book about, 15 years ago. And they love it. And we're just like a community, and we're looking for change in the world, and we share ideas. And I'm back with Dave and Jordan. We're doing weekly shows again. We're just talking about the stuff we see. And, a lot of times it's little stuff. It's a brand popping or a brand falling apart. Like I talked about that right now. Like, Nike, I think, is still falling apart right now. And there are other brands that are really hot I'm investing in. So we try to get ahead of the trends and invest in them. It's literally that simple. And how fucking fun does that sound? It's the funnest investing ever.
The big moment, I think, where I remember your channel was popping off, the fake Pokemon box.
So
you did that live stream.
Yeah, but that was like a different thing. That was the NFT. That was during the NFT days. And so one good thing came out of that, though. I met a guy, Gary King Pokemon, from that. And I had this concept. Logan Paul bought the most expensive Pokemon box. So I was going to buy the most expensive one on top of that. Yeah. And I was going to auction off and give it away for charity to my foundation, just to have fun. So I was like, it seems so fun, Pokemon. And so I did it. And it didn't really make much money. Like, I ended up giving hundreds of thousands of dollars to kids, charities. But the market had come down on Pokemon a little bit during that period. But I met this guy, Gary King Pokemon, and he introduced me to another guy, Matthew, who was starting a Pokemon trade show. And he's like, this guy's really smart. Chris, you have money. You believe in this world. I'm like, I do believe this world's going to be big. I believe like that whole world of anime and like trading card games is a world that most people on Wall Street, and they don't believe it. They don't understand it. They think it's too nerdy. I love nerd culture. I think nerd culture is going to grow massively over the next 2 decades. And so I wanted to invest in nerd culture, and I was really trading PSA at the time, like collectors. And then it was funny because that got acquired by Steve Cohen, and I have a good story about Steve Cohen too. I can talk about. I've never talked about it. Cool. Having this leaks, but he bought that, and I was like, dude, I was trading that. I want to, and he acquired it, and I was like, that's BS because that stock was going to double if he didn't acquire it. So I invested in this trade show. And now Collecticon is like a major trade show. We're doing 18 shows next year. It's weird how when you do things in life, you never know how they're going to play out. So I tell people, just do a lot of stuff, meet a lot of smart people, and just engage with people in a positive way and do good things for them. You never know how it's going to come back and reward you. Because I'm like that whole time that like I was doing Pokemon stuff, I didn't make any money from it. It was just a fun thing. I was having fun with the community, with all these big Pokemon people. Like there was nothing in it for me at all. Like zero. It costs me money. I threw that. Did you come to that party?
I did. I was there, and you gave me the empty boxes, and I still have them on display. By the way.
Do you know Steve Aoki did that with me? So that party cost me $100,000. So you're like, Chris, you just spent $100,000 to give away $300,000 to kids' charities, and you got nothing from it. At the time, I got nothing from it. But I ended up meeting a guy, and everybody really thought I was very nice by doing that for the community. And they were like, this is a guy that we can introduce to people. I ended up owning a big chunk of this trade show. Now it's a huge, global trade show worth potentially insane amounts of money. So it's funny how life rewards you in weird ways. You just got to go out and do stuff and do things.
I'm really curious when you do social arbitrage, because I think that's really interesting. What do you look for specifically? And before you go into that, I do want to say that I've seen Macy honestly picks up on a lot of things before they become like mainstream. One of the things that she's gotten really into that I've never heard of before, and they're gaining a lot of popularity, the little figurines called Sminskies. You've heard of this?
Yeah, I've heard of everything. This is all I do.
She's into this, and she's showing me these communities on like Facebook and
called?
Reddit. It's like a Sminsky. They're big in Japan, and she was like, oh my God, this place sells Sminskies, and we bought like 12 of them.
Yeah. And
some of the stores, they're so popular that they limit them. They're like 2 per customer. These little figurines, and like there's a rare one, and I'm thinking like this is something that before anyone else gets to it, and like
So you have to understand something. So Wall Street, we always say that Wall Street's rigged. It's rigged in our favor. Like and it pisses me off when people say that Wall Street's rigged for like institutions and hedge funds. It's not. It's rigged in our favor. Wall Street still today, their best alpha, the very best alpha that Wall Street has, is access to credit card data. And they've had it for like a decade. So I have this data now, right? So like they get all the credit card data and they know what people are buying and selling in like weeks behind. So like they know what people were buying and selling 2 weeks ago. Like not selling, what they were buying in stores. But the data is dirty. It's not that great. It's not even that reliable. That's the best data they have. But we have better data than them. We have data that they are not willing to even look at. And it's data that they wouldn't even know what to do with because it's just their heads don't work like this. So I had a company, Ticker Tags. We were the first social data intelligence company for hedge funds. So I taught hedge funds how to interpret social data, conversational data. Like, so when I say social data, what I mean is conversational data, people speaking to each other, real humans speaking to each other about what they're doing that night, where they're going out, what they want to buy, what shoes they like what movies they like. That data is so rich, and it is the gold standard for investors. Because what do people do before they buy something? They think about buying it. They talk about buying it, right? They converse with their friends on social, and specifically the gold standard I tell everyone for the last 6 years has been comment data on TikTok videos. Because back in the day, I used to analyze Twitter, and my intelligence platform, we had a deal with Twitter. We basically had 10% of all the tweets in real time, and we created an index of 1.4 million word combinations that represented every brand and product on earth and anything that could be spoken that could be relevant to a publicly traded company. And we would monitor the volume of conversation around that topic. So I can tell you if people were starting to talk about that thing that you just mentioned, right? More than a month ago or a year ago. I can tell you if people are starting to talk about the iPhone or how many people talk about the iPhone in the 7 days before its release compared to the 5 years before that in that 7-day period. So using conversational data to measure interest in granular topics that are really important to publicly traded companies. So that's data that anyone in the world has access to. Just go on TikTok and start reading comments of trending videos. Literally, just do that. That's what I do. That's how I'm generating all this money. I'm reading comments of TikTok videos. That's my alpha.
What are some of the things that you're seeing right now that, like, smaller things, like before we go into robots, give us small examples.
Also, if the average viewer out there wants to try to take something away from this conversation and implement it in their own investing strategy, would they go and make bigger sized plays on fewer companies or more plays on more companies? Like, how would they implement this? That
doesn't matter so much. Like, how you trade doesn't matter that much. Everyone focuses so much on the It's all about alpha. It's about finding information that other people haven't found out yet that's meaningful to a publicly traded company. It's that simple. So I think Crocs are crashing right now. So I'm shorting Crocs. I believe that Birkenstocks are doing really well this holiday season. So I'm long Birkenstock. I believe that Elf Cosmetics is doing better than the market thinks they're doing right now. So I'm long Elf. I believe that Nike's not doing so great right now. So I'm short Nike. So I won't be right on all this stuff, but I'm getting this mainly through conversational data. I can see what people are talking about. I see how they're talking about it. I see where the buzz is. Vans are doing really bad. Vans is, the company that owns Vans, VF Corp, also owns North Face. North Face isn't doing too good right now either. And so they're trying to pull a turnaround, but the turnaround isn't working because I'm evaluating people speaking about Vans and no one's speaking about Vans. It's just not happening. So I'm short VF Corp. So these are kind of some of the little trades that I'm involved with right now that might only last a few weeks. And no, I'm not putting 10% of my portfolio on them, but this is more historically what I've done, right? Fun trades I've talked about in the past is there was a time about a decade ago when women started to transition from wired bras to bralettes. Bralettes are bras without wires in them. Victoria's Secret made their brand on wired bras. Bralettes cost about a third of what a wired bra cost. The margins are much lower, and Victoria's Secret didn't even sell them when they were coming into style. All right. So it was hugely detrimental to Victoria's Secret when women wanted unstructured bras
How do
without
you
wires.
know this? I mean,
Because
my gosh.
because I see people starting to use the word bralette. And I said, what is the word bralette? Oh, okay. Now, once you see it a little bit, then you start researching it. Then you start researching, and you're like, oh my God, a lot of women are talking about bralettes. In fact, at the time, they were talking about either wearing bralettes or no bras. This is like during that no bra. So it's like, it was like this error when people didn't want push-up bras, because Victoria's Secret built their reputation on wired push-up bras, which were really popular for 20 years, right? And so this is really detrimental for that brand, because one, they were late to start selling bralettes. And then even when they started selling bralettes, the market for bralettes were so cheap and the margins were so thin that every customer that bought a bralette instead of a bra, they made less money on. So they were getting killed from every angle. So if you're the first to detect that change in the world and then connect the dots to who's going to win, who's going to lose, who is the winner? Aerie. Aerie was one of the first brands to start selling bralettes. So they benefited from the bralette trend. Victoria's Secret was harmed by the bralette trend. So that's a really weird random example, but I have about 80 of those over the past 18 years. So the past 8, when you say, Chris, how did you turn, I've generated, I don't know, 70 or 80 million or $90 million from $20,000 over 18 years, right? And the weird part is that if it wasn't for all those gains being short-term and me paying taxes every year, like on all those gains, and me pulling so much money, I pulled almost all my profits out every year to invest in startups and private companies. If I would have just left all that money in my brokerage account and maintained those returns, that 20,000 today would be like $1 billion at least, I think. So, but you ask, how do you do that? I did that from roughly 75 trades that happened over 80 years. The bralette trade, this trade. Oh, e.l.f. I just talked about e.l.f. My first e.l.f. trade was when Jeffree Star, who's a beauty influencer, did a YouTube video talking about their e.l.f. putty primer, which is a $7 putty primer. I know you guys don't know what primer is, but
it's
putty
a
primer.
Makeup.
Yeah. So
it's what you put on first, right?
Yeah. So e.l.f. was this really junky brand that they only sold in drugstores, pharmacies, CVS and Walgreens, right? It was a junky brand. And Jeffree Star comes out and does a video and says, this $7 putty primer is as good as this $50 putty primer. And he did this whole video. You know how many views it got? Like 12 million views. So you know what I did? I went to the Walgreens by my house and I just stood there, right there by the putty primer, by the e.l.f. I just stood there. And all day long, moms came in and girls came in and they would just go, oh, why are you here? We saw the Jeffree Star video. Oh, cool. I watched. They didn't just buy the putty primer. They bought the putty primer and then they would maybe get one or two other things from e.l.f. Because all of a sudden now e.l.f. is like a cool brand because Jeffree Star said it was cool. So I actually went out and I found the Wall Street analyst that covered e.l.f. and cosmetics brands for one of the big 4 banks. And I called them up on the phone just randomly. I'm like, hey, I know you cover this sector. I just want to ask you, have you seen the Jeffree Star video? He's like, who's Jeffree Star? I hung up the phone. That's all I needed to know. Right. So it's like Wall Street didn't even know. They don't watch YouTube, right? These guys, these sell side analysts at Goldman and B of A, they're not watching Jeffree Star makeup videos on YouTube. I am. That's where I get my alpha. Okay. So that's how you do it. That's how you do it. So e.l.f. was $7 a share, $7 a share. And I went all in on e.l.f. And unfortunately, I exited most of my e.l.f. at about 14, which is like a couple months later. It almost doubled pretty much in like a few months. And the funniest part about it was that on the earnings call, they called out the e.l.f. primer putty. And it was a primer putty, primer whatever. I was like, man, it was so cool and that's what I call the point of information dissemination. So I invest at a point of what I call information imbalance, when you have information that the rest of the world doesn't have, at the point of information parity, when that information has been disseminated amongst other investors in Wall Street. Sometimes that could be through an earnings call. Sometimes it could be because an analyst did finally pick it up. Or sometimes it's because the credit card data starts showing big charges. And then Wall Street picks it up and they start trading it. Have you ever noticed that stocks sometimes move like a week or two before earnings? That's the credit card data that Wall Street's trading. So I actually spend 6 figures on data every year. So I spend hundreds of thousands of dollars to buy institutional data, the same data the hedge funds buy. But I don't buy it to trade off of it. I buy it so I can see when they're seeing what I saw earlier. And that's when I know that the information I saw is now being reflected in their data. So my window is closing, and that's when I exit. Does that make sense?
Wow.
It does. How long, if someone wants to do some sort of social arbitrage investing, should they research something before they actually make a move?
So I sometimes the top of the funnel where I find something on TikTok, and I'm
The
like,
discovery.
The discovery is very exciting. As you find it and you're like, wow. Once you discover something, then you have to vet it. You have to make sure that it's real. So I will look at Google Trend data to see, are people searching for that thing? I will look at WebStats data. I will go to the stores where they sell that product and start talking to clerks and verify, hey, show me your hottest product, and see if they're going to tell me the thing I think they're going to tell me, right?
And on
so
that real quick, did they ever ask you like why? And you tell, I want to make an investment.
Yeah,
Is that ever,
so what I try not to lie. I'm not like comfortable lying to people. So I tell them that I'm doing research, like I'm just doing research. Like I do trend research. I'm like, hey, I'm a trend researcher, which is true for my investment.
But that's never led into a conversation of them being like, maybe I should invest.
No.
If they do, it's what?
No.
A few
That-
$100 bucks.
I'm just saying that would be interesting.
These are clerks that sort. Do you remember when Under Armour started making their, what do you call their undershirt?
The tighter thing,
That was like 7, 8, 9, 8 years ago. Cold gear. Remember the cold gear? Under Armour was first making cold gear. That first winter that they were making cold gear, it happened to be a really cold winter, and I went to the Under Armour store because I had seen that people were talking about this everywhere. I went to the Under Armour stores and the outlet stores, and I'll never forget it. I asked the guy at the store, I'm like, are people buying this, this cold gear? He's like, sir, he goes, we have never experienced anything like this in the history of the company. It is crazy. We cannot keep stock of it. We're manufacturing as much as we can make. I'm like, thank you very much. I remember coming out of that Under Armour store. I remember the outlet mall I was at and calling Jordan and Dave on the phone and being like, dude, we are going all in on Under Armour today. I was like, wow. The market was already closed, but I was like, tomorrow morning we were going all in on Under Armour. But like, so you want to like, when you get in a trade heavy, you want to leave nothing on the table. You want to make sure anything that you can investigate to like prove your thesis. I call it in my book, you have a thesis. My thesis is that this thing is going to really benefit this company this quarter. But that's a thesis, right? You have to prove out the thesis. So like anywhere where you can pull data, speak to people, interview people, like you got to get all the data you can. And so what's really cool about having a community now, like when Dumb Money, like when I find something, like I'll just share it with them. Be like, guys, I found this. Like poke holes in my thesis or help me prove my thesis. And now like to be part of a community of investment nerds that think the way you do, first of all, it makes it more fun because I'm not a loner. My whole life, I've been a loner investor, like the weird investing kid. No one else invested like me. You have all these technical traders, the technical traders, they're like a class of their own. They all relate. I don't relate to them at all. Wall Street traders that are like fundamental traders that analyze spreadsheets, like that analyze that's boring as crap to me. Like I never want to do that. I don't relate to those guys at all. Reading comments on TikTok videos and looking for trends and connecting dots to the next big thing, that is freaking fun as hell. Like I would do this for free without making money. The fact that I'm able to make this much money doing this, like I'm watching TikTok videos and that's my job. It's just watching TikTok videos and reading comments. And it's pretty cool because you feel like a really deep connection to the world and culture because I'm reading literally thousands of comments a night. So I'm reading what all the youth is speaking about, like what everyone's speaking about from every demographic, no matter who you are, what you look like, where you live in the world. Like I have a really good sense at like how people are feeling, what they're doing, what they're liking. And it feels good to be that attached to the world, but it's like my profession. But it's kind of fun.
How do you know if you're late to something? Because you talking about this has got me running through my mind of all the things that I'm thinking that I've noticed that people my age and younger are gravitating towards. And the one that really stood out to me, it's in the refrigerator over here, is Fairlife protein shakes.
Yeah, that is.
And I'm like, my gosh, for the last year, we have been obsessed with these Fairlife protein
That's
shakes.
been
They're
big
so
for
good.
like 5-6 years.
But
dude.
exactly, so I'm late to it. So that
you are
wouldn't be a
definitely
thing.
late to it. But also,
like-
when it comes to milk products, believe me, I've had numerous opportunities to trade. It's dairy. It's you can't trade dairy in the public markets right now. It's very difficult. I've had numerous opportunities to trade dairy. I've considered trading like commodities. Like you just can't do it. So there's no way to trade that stuff.
Here's another one that I found interesting is that about 2 years ago, year and a half ago, Macy's been a big fan of Starbucks.
Yeah.
She stopped going to Starbucks,
Yeah, that
and
was
she
a big
complained
one.
that the prices were too high, and she instead started going to Dutch Bros.
Dude.
And Dutch Bros started popping up everywhere in Vegas, and they were paying an absurd amount price per square foot for these little retail kiosk sort of places. And I was thinking to myself back then, I'm like, if she's doing this, not going to Starbucks, how many other people are preferring Dutch Bros?
Dude, you don't watch our show enough, Graham. That's been a storyline on our show for years, Dutch Bros. And the Starbucks short, the great Starbucks short this year. That was one of my biggest trades of the year, the Starbucks short. Yeah,
So I'm on the right track.
You're absolutely on this.
I'm 2 years late.
Timing is everything. So you're organically seeing things through your life, and that's great. We live in a digital world now. What's really cool is that you don't know if things are going to hit you a week late, a month late, a year late, 5 years late. But if you're proactively reading thousands of comments every day of your life, you're going to pick up on that stuff the second it happens, right? And so I'm being proactive where you're being reactive, which, by the way, there are a lot of opportunities to invest just by being reactive because a lot of times you'll see it first by chance because someone in your life, it could be Macy, just by chance, you're seeing it quickly. But I don't want to take a chance. I want to see it quickly every time. But to answer your question, what you just asked is the hardest part of my process. Trying to discern the degree to which that information that you discovered is already well known by the investing public is a little bit of an art and a science. So what you do is you have to leave the real world and go into the investment world, where people talk about stocks on stock boards and Seeking Alpha and analyst reports and news stories. And anywhere where someone is talking about that stock, you read everything. You read every quarterly report going back multiple quarters. You want to see if there's any mentions about that thing that is part of your thesis. So if your thesis is that Starbucks is becoming too expensive and therefore people are not going to Starbucks anymore and they're switching brands, to what degree are investors aware of that? Are they talking about that? And are they deciding to sell their Starbucks or short it because of that? To what degree do sell-side analysts talk about that in their reports? To what degree has the company admitted that? So it's not a black or white thing. There are a lot of gray areas, and it's the toughest part because people are like, oh, when do you sell? You sell when you hit information parity. Well, how do you know? You don't always know. You just have a feel for it. You're like, okay, I think people kind of know what I knew, so I'm going to maybe sell half, right? Once you know for sure that the world knows about this, you're out of the investment. And it doesn't matter if you made money, lost money, what the stock did. I only trade information. I don't trade stock price. I just trade information. So and like I said, it might get into our eventual conversation about robots.
Let's talk about robots.
Yeah,
I can tell you've been gearing up this entire episode.
I love it because you know what? Like there are all these small trades and they'll go on forever, and I'll be doing them forever. But the big ones don't come around that often.
Okay.
And occasionally there's one that comes around once in a lifetime, I think. And this is it for me. Like this is it. This is the biggest trade of my life. And it's the robot trade. It's, the fancy way to say robots or humanoids is embodied AI. It's the embodiment of artificial intelligence, right? And you probably heard Jensen at NVIDIA talk about it a lot the last 6 to 9 months. You hear Elon talking about it a lot. I've talked about it constantly, but I firmly believe that the embodiment of artificial intelligence is going to radically rebuild our world and change our economy unlike we've ever seen in our lifetime.
Start us out with why robots. Where did you first come up with the concept of robots are going to take over? This is going to be the next great wealth transfer, so to speak, that this is it.
It's just the biggest change to our life. And with that big of a change comes opportunity. right? 8 years ago, I was introduced to a couple kids that had came out of the UT robotics program in Austin, and they were making exoskeletons for the Defense Department and for NASA. And they were generating a ton of money, like $30 million of contract revenue, making basically Iron Man suits. I was like, this is the coolest thing I've ever seen, and this would make for the dumbest investment of my life, so I'm not investing in you. And I said no. But I kept up with them over the years. And every time I go to South by Southwest, I meet with these kids. And I'm like, oh, they're really advancing their stuff. And then one day, they started making humanoid robots. And they pulled me aside. This is about 3 years ago. And they said, we are having a moment with humanoid robots, with actuator technology, which are the muscles of the bots, with sensor technology, and with whole body control, which is how the robot controls itself and walks and balances and articulates. And the founder of this company, Jeff Cardenas, said, Chris, within low single-digit years, I'm going to have a walking humanoid robot that is going to be able to function in a commercial and industrial setting and do physical labor at close to human speed. And I was like, you know that if you actually were to achieve that, it would be the biggest thing that was ever invented. He's like, I know, and it's going to happen. He's like, I guarantee you it's going to happen. Low single-digit years. And I was like, well, you're probably crazy, but just in case you're not, I'm going to write you a check. And I wrote him a check, a smallish check for me. And I kept up with them. And I was like, maybe I should research this stuff a little deeper. I started researching humanoid robots, the viability of them, the history of them, how real this was. And then Elon started talking about it. I was like, oh, Elon's talking about this now. I think this is kind of interesting. And then I got a call a year ago from a venture investor that I had kind of educated on robots. He's like, did you hear about this company in San Francisco who's raising like $700 million backed by Microsoft and OpenAI making humanoids called Figure AI? I was like, not really, but can you introduce me to the founder? And he did. And I ended up making a pretty large investment in that company. And then I also went back to Jeff and I said, Jeff, like, what's going on with your robot company? And I can't say anything too specific here tonight, but there's some big, big things happening with his company as well. And I ended up just started to like hang out with Jeff and like be like, how can I help? I want to be part of this. And and now I'm like 300 hours deep into humanoid robotics research. I converse with humanoid engineers around the world. I talk to other investors that are invested in either Figure or Apptronic or both. And we talk about this 7 days a week. Like we're doing deep research. We're analyzing the technology. We're trying to assess how quickly it's going to be adopted by the world. Because we're investors in these companies, we have like insight that almost no one else in the world has from their CEOs that I can't speak about on this show because I'm under NDA from both companies. And all I can say is that what I have seen with my own eyes is unbelievably real, and this is happening. This is no longer like a 50% or 90% or 95%. It's like 100%. We are going to have humanoid robots that are going to be doing commercial physical labor that will be able to do any job on Earth before long. And we're going to have access to infinite labor in our world. Think about what it's like to have access to infinite physical labor. What would we build? What industries would evolve from that? How would that change our world? Imagine, there's 100 million people in the world who spend the bulk of their prime years when they should be getting married, having kids, having a joyous life. They spend those years taking care of a parent or grandparent. Not often in our world, but in most of the world, that's common. That's insane. It's actually insane. Could you imagine spending the bulk of your prime years just wiping the butt of your granddad? Well, that's a story that Jeff tells about his grandparents. And that's one of the inspirations of why he started Apptronic. And for 10 years has been trying to build this humanoid robot. And we have a few of these humanoid companies around the world, not many, a few that are truly real and commercial and scalable, that are going to be, I think, become some of the largest companies on Earth. And right now they're very small, except for one, Tesla, right? And so Tesla's not small, but what the funny thing about Tesla is all the exciting stuff happening at Tesla right now, hardly anyone's paying attention to the only thing that matters at Tesla, which is their humanoid division, their Optimus division. So I put out a tweet thread back in January of this year, almost a full year ago. And it was a 15-part tweet thread when no one was talking about humanoids. And it was how the Optimus division of Tesla by 2030 could be valued at $10 trillion based on them only producing 1.5 million robots at $100,000 a year lease rate, which is going to be the going rate for commercial robots. Yeah.
Lease.
So commercial robots will be leased to the world. So they won't be, you can't buy them. These are robots that you'll see in factories, the robots that you'll see in warehousing and logistics facilities all around the world. There's demand for tens and tens of millions of these robots. And it's not because these companies want to displace humans. None of them do. These companies simply want to grow. They simply do not have the physical labor they need to grow. So these robots will allow them to grow. Depending upon who you believe, we have somewhere between a 50 million and 350 million human labor shortage by 2030 for physical labor. So we need 50 to 350 million human physical laborers, and we're just not getting them. If you talk to these companies around the world, they cannot find young people to do these jobs that older people are doing, physical labor, laying foundation to all this stuff. So the demand is through the roof. But forget about the demand.
Yeah.
I mean, imagine having infinite physical labor on Earth. What can we build? What can we do? Like, how would our lives change? Imagine every human, as you got older, you had someone to take care of you, right? To help you get up, get out of bed, get to the bathroom, someone to take your trash out. It would allow you to live a more productive, humane life in your older years. It would dramatically increase the quality of life for almost every human on Earth.
This, to me, seems like it would drive down the cost eventually, just about everything. Like, let's say building a house is a good example. When you remove the labor component and you're able to employ these robots that work 24/7, perfect, without making any mistakes, the cost of these things should go down as companies' profit margins increase.
There's one problem with your thesis,
Yeah.
and there's a paradox, and I don't have the name of it off the top of my head, is related to coal. And the concept was the more coal that we were able to find back in the day when coal was the energy that everyone used, the cheaper coal would become, right? Because you'd have unreal amounts of coal, and it would get really cheap. Do you know what happened as we started to discover more coal?
We use more coal, right?
We use more coal. So maybe the things that you're thinking of today, the style of house that people like to live in globally would get cheaper, but what we will demand out of the world will go up. So the same way that we live in mini mansions now that never existed 25, 30 years ago, that's become common now. People expect that now. No one ever expected that now. We all grew up in 1,500 square foot houses, right? So what we might expect, Graham, in 20 or 30 years might look very different from what we expect today out of life. And so, yes, if we were to live exactly like this in 30 years, it could be super deflationary. But if our expectations on life climb that high, if we start to enter an age of abundance where everybody wants all this stuff, right? Whatever it is, everybody wants a humanoid. Nobody wants to cook anymore. No one wants to clean their house anymore. The humanoid does everything for you. Everybody wants this and that. It might radically change the economics of your thesis. So it's we can't really visualize that.
But really quick, I just want to mention something to you guys that if you run a small business, you know that managing things like payroll, benefits, and taxes could seem like a full-time job. It's an absolute hassle. But with today's sponsor, Gusto, who, by the way, I've been using them for years and absolutely love them, it doesn't have to be that way. For those unaware, Gusto is the all-in-one payroll, benefits, and HR solution built for small businesses like yours. With Gusto, payday is a breeze. No more manual calculations or tax headaches. And with automatic tax filings in all 50 states, you could save hours every single month. Plus, Gusto offers health insurance, 401k plans, time tracking, and even access to certified HR experts all in one place. So you could focus on doing what you love, which is growing your business.
So join over 300,000 small businesses that are already using Gusto and see why it's rated G2's #1 payroll product.
And here's the best part. You could try it free for 3 months.
Seriously, guys, this is kind of like a full circle moment for me because when I first started working for Graham, I originally created my S-Corp. And guess what I used? I used none other than Gusto. I have continued using them this entire time because they are seriously that good. Go to gusto.com/iced to get started today. That is gusto.com/iced, or click the link down below in the description.
Thank you, Gusto, for sponsoring today's episode because genuinely, I have used their platform for years. I absolutely love it. I don't go anywhere else. I would highly recommend them. Thank you again. It is so cool to have them as a sponsor. And now let's get back to the episode. You know the feeling when you're working out and your earbuds just keep falling out as you're leaning over, or if you're on an airplane but your current headphones just aren't cutting it? Yeah. Same. That's why I've been recently loving the Raycon Everyday Earbuds, the sponsor of today's video.
Honestly, they've just been a total game changer for me. The sound quality is amazing, they're super comfortable, and they actually stay in your ears even when you're moving around. And I'm not gonna lie, I have some weirdly shaped ears because earphones have never fit in my ears, but the Raycons actually do. Plus, they've got features like active noise canceling and a 32-hour battery life. They're perfect for literally anything.
And of course, my favorite part is that they're affordable. Like, they've got all the same features as the expensive ones, except they start at half the price. You can't beat it.
And if you're like me and you often forget to charge your electronics, no sweat, because with the quick charge feature, 10 minutes of charging gives you 90 minutes of listening time.
I got the green headphones with the concrete case. Jack got the black headphones with the sunset case. And you could get whichever one fits your style the best at a discount. All you have to do is go to buyraycon.com/iced for up to 20% off of your order. Again, that's buyraycon.com/iced for 20% off site-wide. Trust us, you're absolutely going to love it. Buyraycon.com/iced. Thank you so much, Raycon, for sponsoring this episode. And now let's get back to the podcast. What are the biggest misconceptions people have right now for humanoid robots? Do you think people are more in favor of this, or do you think they look at this and say, that's going to take my job? This is bad for the society. We need to stop this.
I think almost all people will support it, but there will always be some that say that. I mean, the truth is there's never been a time in history where a technology that displaces human has not created more human jobs, not less. Because what will happen is once we have access to all this infinite physical labor, it's going to create tremendous demand for new industries, new things, right, that will require humans, right, to be able to manage and do more companies, more sectors, more things in life, right? Maybe what we understand as work in 20 years doesn't seem like work today, but it will be work in 20 years. Maybe we all become entertainers. I don't know. But life will change, and we just cannot perceive how that life is going to change. So initially, people will be scared like they always are. They were super scared back in the day when we had technology, right, for the first time, and it started to automate old jobs. What happened? We have so many more jobs now because of technology, right? No one would have ever believed that a social media manager would be a job. If you showed someone 40 years ago, what do you do? Oh, I make memes for a living. Like, that's not a job. You're like, yes, it is. It's a hard job. It's a hard, and like, no, you don't actually work in 2024. But like, you get what I'm saying?
Yeah.
So like, when we think about what a job looks like in 2045, we would laugh at that today.
Sure.
But in the future, they'll be like, this is a serious job that does a lot of good for the world and makes people happy and adds value to our civilization. But we can't comprehend that today. And only this type of technological advancement will allow us to enter that future age, right? So I'm super excited because, listen, my life is awesome. But most people in the world don't get to live my life. And, you know, things like humanoid robots are going to solve so many problems for so much of the world that doesn't have access to the things that we have access to at the top 1% in the US.
Are there any downsides that you could think of? Can you make an argument for the reasons this could be a problem?
I think there are a lot of downsides with AI that scare the hell out of me and everyone else. And I think they're super valid. That scares me because it's very hard to control. You can't touch it, feel it. The embodiment of AI is way more controllable when it comes to laborers or robots that help us in the house or to help us at work or to help us build civilization. Where it gets a little bit scary is when you start taking those robots and doing things in the military with them, right? And you have, battle bots, and you have the little things from Black Mirror that will attack your home, millions of robot bees. That scares the hell out of me. But I think the robot companies that I work with right now are all pretty adamant that they are not getting involved in any of that. So I think when you think about embodied artificial intelligence, you have different sectors. And the sector that I'm referring to, which are humanoid robots to rebuild the earth in a way that benefits society and more people and humanity, and helps us in our homes and helps the elderly and helps healthcare, right? I don't think anyone's going to have an issue with that. I think drones and all that stuff gets very scary very quickly. But I wouldn't want to merge those two worlds together because I know the CEOs of these companies, and they certainly are thinking about positive things, right? And only positive things. for our world.
What is the current state of humanoid robot engineering? What companies are at the forefront of that, and kind of what is the product that they've been able to produce so far?
So there's 3 in the US. There's Tesla with Optimus. There's Figure AI in San Francisco, and there's Apptronic in Austin. Apptronic has been mostly kind of fly under the radar, I think on purpose. But I think we're going to hear a lot more about Apptronic in the next year. There is Boston Dynamics, which is owned by Hyundai. They actually made an experimental robot for 10 years. It's the one that we all saw videos of, and we think is really cool. Yeah. Well, the dog, but also the big one that would do the flips and stuff.
Oh, yeah.
The problem is that's an experimental robot that has, hydraulic actuators. It costs like over $1 million to make. It's not a commercially viable robot that you could put in a factory or you can put in a warehouse to move boxes. Do you know how many boxes are moved a year commercially? Like, just think, what would you guess? Just get commercial boxes move from trucks to warehouses.
Did you say in the world or
globally? Yeah, globally. Just take a wild
I'm
guess.
guessing probably 10 billion.
No, I'm gonna say 2 trillion.
Yeah, so I did some cocktail napkin math. I'm pretty good at it, but it could be off. But I estimated about 9 trillion boxes this year. I think there are some stats that support a number in that range. But just that alone, moving boxes. And by the way, no human on Earth should have to live their entire life moving sheet metal from 2 feet behind them to 2 feet in front of them for 45 years. Lower back issues, their older years are horrible, right? Those jobs won't exist for humans in 30 years. And that's a good thing. We need to take care of these people in the interim time. And by the way, like I said, no one's displacing these humans anytime in the next 10, 20. Like, we need more physical, not displacing the ones we have. We need to keep the ones we have, but add more. The next generation, they don't want to do that work. But these bot companies right now, it would blow your mind how advanced they are and how quickly they're moving. Like every month, it would literally melt your mind. Like the things that I've seen, like it's wild how quickly they're moving. And I haven't even seen everything yet. But they will be doing commercial work next year. There will be humanoid robots in 2025 in factory settings doing physical labor jobs next year. In small batches, there's a lot of learning, a lot of edge cases, right? So they'll be working in controlled settings. We're going to try to get them up to human speed, right? Because right now they're not fully at human speed. But I think people in this sector are adamant that they can get up to about 120 to 150% of human speed eventually.
And they wouldn't have like 9 to 5 work hours either.
No.
Right?
They'll be working 23 plus hours a day. So the batteries last about 4 hours. In some cases, they're hot swappable. In other cases, they're rechargeable. I mean, there's a lot of different approaches, and different companies are taking different approaches. And that part's not even that important. But they'll be able to work 23 hours a day. Yes.
You have robots hot swap the battery.
They will be. No, they will be.
Yeah.
They will be. They 100%. That's already going to happen. But again, the humans, if any humans were to get displaced, they're going to be doing better things that are probably making more money than they make currently. So, but this is happening, guys. It's not happening like right this second, but we're not talking about 10, 15 years away. When Elon says something, I don't believe it, but it might be true, but I don't assume it's true. But all this talk that if you read between the lines, the stuff Elon's been saying about humanoids, it's not fully true, but it's kind of true.
Kind of reminds me of like in the 1940s and 50s, how having like a TV in your house was like a rich person thing. And then they became really common. The internet, having a computer in your house was like a big thing in the early 90s. Like you go to grandma's house, she didn't have a computer. Now they're common. Everyone has one. That a robot could be like a rich person thing 10 years from now.
Initially, yes. But eventually, everyone
50
will have
years
one.
from now, it's like a commonplace. Every house has one of those like little robot workers cleaning, cooking, laundry, housekeeping, gardening.
Ask a mom about this, how badly they want one, right? I mean, you ask any mom if you had a bot in your house that would literally just go around picking up stuff and did nothing else. She'd be like, sold. It picks up stuff, sold. It also does your dishes. It also does your laundry. It also does your closet. And when it turns from spring to fall, it redoes your closet based on the fall stuff. It'll take all the spring stuff, fold it up, put it away. It knows what you like. It knows how you like things, right? We're talking about generalized autonomous robotics. We're talking about robots, guys. This is not decades away where you will be able to speak to the bot using large language models. It will interpret what you said. It will learn on the fly and do whatever you need to have done.
Are relationships going to be obsolete? Are people going to choose to have relationships with robots?
I think the thing that threatens relationships more than anything else is not so much the robots, but the artificial intelligence bots that are companion bots, that are more digital. I don't necessarily know that the human, like the robot form, eventually, maybe, but like my mind's not there. That's kind of crazy. Yeah, eventually, yes.
It's going to be indistinguishable.
What is wild is if you were to study what's happening right now with companion bots, meaning artificial intelligence, not physical bots, but just AI companion bots, it is some of the stickiest technology we'd ever seen in our lifetime. It is so sticky. Once people start using those companion bots to converse,
dude, I'm seeing news stories of like young men falling in love with these bots.
It's happening
all the time. There's like a Game of Thrones bot that like remember that and like told I guess the guy was a little mentally unstable, has his own issues, but like was deep in this bot, like having conversations as though it's a real person, taking everything to heart.
I know this. That's happening. That will happen. I don't think I like it. I do like some of the mental health stuff because anyone could have access theoretically to the best psychologist, who gets to know you and understand you. Again, these are things at the top 1%. We all have access to it. Most people don't. To have access to like state-of-the-art, the best psychology, right? The best custom for you. Education is going to be radically reformed.
Physical health, I think, would be crazy.
Physical health, right?
Like,
how about having your bot trainer at home? Have your robot trainer, like your physical therapist?
But I'm saying this is the epitome of population decline because someone doesn't need to go out and be social. They don't need to meet anybody. They could have one robot that serves every single purpose: a friend, a companion, a lover, a psychiatrist, a doctor, a personal trainer. You download whatever you want to. They're everything you want. You don't want to talk to them. You tell them away.
That's a deep, dark wormhole. I will tell you this. I'm older than you guys. I grew up in the 80s and 90s. And you know how people say, and they look at videos of people when they went to parties, how they're interacting and engaging and what it was like. I'm going to tell you right now, it really was that good. Like it's no bullshit. Like I reminisce. I talk to my friends all the time. I'm like, do you realize how lucky we were that we got to be in high school in the late 80s, early 90s? And we're all like, dude, it was incredible. Like no phones, no anything, no record of anything. People all talk to each other.
No record of anything.
You would engage deeply with other humans all the time. Like you were constantly just looking in the eyes of your friends and just engaging and hanging out and having these moments all the time. There was never a phone. It didn't exist. I do agree with you. It scares the hell out of me because it's not an exaggeration that that time period was so special. It was phenomenal. It was great. I would do anything to go back there. I even say, like, I hope that the metaverse can replicate that world so I can just go back and relive some of it. Because, like, it was really that good. And I have massive concern about, like, the way that this is messing with our heads right now. Like, no one's head's more messed with me. I told you, I spend hours a night on TikTok for my career, profession, and it has rewired my brain to where I can no longer watch a movie anymore. I can't sit down and watch a TV show.
You know what's bad? I started watching Netflix 2x speed. They offer a feature 2x
I would do
speed
that
because I'm like,
I would
it's
do
too
that.
slow. Like I'm so attuned to YouTube algorithms
It's
where
a
I'm like,
sickness.
there's a pause for a few seconds. I'm like, skip.
That's crazy. What does Macy think about that?
I don't do that with Macy, but if I'm like traveling on a plane or something like that, or I'll just put it on.
I force myself now. I say, hey, this show's great. I know it's great. I'm taking my phone. I'm going to force
I have
myself
to
to
put
watch
it away.
this. And it's so slow. And it's like, but I'm like, I can't. 'Cause if I don't do this, my brain is going to get so warped. And it's like, I know what it's like to be a 15-year-old. Like, it's horrible, guys. It's horrible.
But you hear stories of people, like, they're getting married later, they're having kids later, they're having their first, like, intimate experiences later in life. They're more, but I think all of that's a reflection of just people are glued to their phones, not having social interaction. And robots are going to be worse.
It's more than that. It's more than that. So I think about this all the time because I have kids that are 14, twins. They're too smart. They know too much. So if you look at relationship TikTok, everything you would ever want to know about the opposite sex, about how to engage, like they know too much, and then they get angry and expectations get high. Like there's so much information, people talking about relationships. We were so dumb 25 years ago. You would just like, when you were kind of ready to get married or whatever, whoever was in front of you, who you were kind of attracted to. I'm not talking about me personally. Just the like I got lucky. I got very lucky. Okay. But a lot of people like from my generation and older is like, oh, like she was at my job and worked at the cubicle next to me and was kind of pretty. And like, that's how people ended up marrying people. Now I got super lucky, but most people that you were just dumb and you were forced to doing that. And you know what? It benefited you because you ended up not overthinking anything. Okay. You just like, you made it work. Yeah. Well, you didn't look for the perfect person. You didn't have these lists. Like, have you seen these like TikToks where it's like the 800 icks that a girl gets of a guy? Like it gets to a point where it's like, dude, like no one's ever going to be happy with a mate anymore because you're looking for all these things and conversing.
But my point is you see that and then you could program AI or a robot to be perfect, but to be imperfect enough. It's like a slot machine where it doesn't give you a win every time, but it gives you a win 1 in 7, enough that keeps you going and hooked. So the AI or the robot is not going to be perfect, but it's going to pull away just enough to make you want to chase it. I think it's going to be scary when it truly understands human nature to be able to push back as much as needed to give you rewards as much as you need to stay addicted to it.
I know it's going to be scary, and I'm glad I'm just an investor and I don't think about that stuff because honestly, when I go down that wormhole, it's depressing. It's depressing for me because I see what's happening, and it's not good emotionally for people. And like lifestyle, like you're saying, no one, they're just staying single now. And I see so many people, like, cause I read so many comments, the comments that I read more than anything else are like, I'm fine being single for the rest of my life. I see that all the time. They're like, I'm happier alone. I'm happier alone. Yeah. People are like, they've given up. Mm-hmm. They just don't even desire it. And that's what's messing with my head. Cause you think about a dystopian future when the concept of a relationship as we've known it throughout our human history, could that theoretically kind of go away when you could have children without being, you know what I'm saying? Like you look at the way we have children now, and with science, we can do that, I think, in 20 or 30 years without even doing any of the stuff anymore. So it's like, it's a really dystopian future, and I see it happening. I really do. I'm seeing it in comment data right now, and I kind of ignore it because it has nothing to do with investing, but I can't get away from it.
Where do you think that's coming from? Where is the frustration underneath all of it? Because it didn't seem like this was like 15 years ago when I was in high school. None of that was a thing.
Because there's an echo chamber of people that are just as angry as you are. And you're able to converse with them or read their comments and watch their videos. There's millions of these videos that are like, women are terrible, guys are terrible, right? And then they just get in that echo chamber of, we're not going to hook up with guys anymore, or like, we're done with women. We don't need women. We don't need to be married. You get nothing from it, blah, blah, blah. Like, and listen, a lot of the points that people are making are valid on both sides. Both sides are valid. That's the problem, is that intuitively, when you read this stuff and you see these experiences that these people have had through marriage and relationships, you're like, I don't want that. Forget about that. And that's why I say it was nice a time when we were dumber and we didn't overthink everything. And we just kind of did things that intuitively maybe don't make that much sense if you're overthinking them, but you end up having this really cool life that's dirty and messy, and maybe your relationship isn't perfect, and maybe kids is hard and they're not perfect, but like at the end of the day, like it's part of life. And like I'm worried that we're overthinking everything because we have access to so much information and so much like engagement with each other of exposing all these thoughts all the time.
I agree. I think we could be overthinking things because I run into the constant problem of having dogma come at me from every direction. Same subject matter, two completely conflicting ideas about that subject matter telling me this is the truth. This is whether it comes to diet, whether it comes to dating, whether it comes to fashion, all of that stuff. And everyone has their own objectively correct opinion. And I also think there's maybe also a chance that we're not overthinking, but we're producing just numb humans. What do you think to the tune of people just spending and whittling their time away on social media and not really having to ask themselves, what is the meaning of all of this? Because they can, I guess, find, escape solitude and just go on their phone and pass time.
It is, but there are benefits to it too. We can all find our niches now.
Yeah.
It was very hard to do that in the past. Like I talked about owning Collecticon and all these people, like they all have communities online, and yeah, they end up consuming a lot, but a lot of what they consume is in their niche, in their passion, right? Whatever that is. It might not be relatable for me, but I do feel that people can people don't feel that they're an outcast anymore. The outcast is going away because there's a community for everyone, and you could find like-minded people and you could hang out with those people, whether it's digitally or consume their content. And there's something joyous about consuming content of people that think like you, and you don't feel alone, right? In life, because there's a lot of people. So there are some positives here is all I'm saying. There's positives and negatives. I mean, listen, I get to ingest robot content all the time. I'm friends with all the robot YouTubers now, right? It's awesome. And we're all robot nerds. And I'm a hybrid investment nerd and a robot nerd, and bring those worlds together. And by the way, getting back to the robot thesis, I think most Tesla investors are not invested in Tesla for the robot division. That blows my mind. It hasn't even scratched the surface yet of Tesla investors.
People are seeing Elon Musk's timelines and that his inability to hit what he says and saying, okay, he's talking about robots. That's probably another 10 years from now. Let's not focus on that. He still hasn't even gotten us full self-driving that's completely hands-off. I could text on the phone and work on my computer and look back at the passenger and not have to keep my hand on the wheel.
Yeah. I love what you just said, because that is the biggest piece of information asymmetry ever. In that note, he cried wolf so many times
that this one time.
Now that he actually is on to the biggest thing that's ever happened, no one believes him. I love it. I think about it all the time. I'm I was saying this a year and a half ago. I was no one is going to believe Elon and his humanoids, because he's already lost his reputation when it comes to timelines on autonomous driving. So no one's going to believe him. And by the way, I'm not saying this is going to happen overnight either, but it's not decades away.
I think people were disappointed when they saw his humanoid experience, and the humanoids were serving people alcohol, and it was obviously a comedian behind speaking with people.
Yeah, it was teleoperated.
Yeah.
Which, by the way, in the robot community, there's nothing wrong with that. Teleoperation is the gold standard in how we train robots. Using artificial intelligence. So you teleoperate the robot, but every millisecond of that performance of how the robot interacts with the human, what they do, the sensors in its fingers, the way that it walks, the way that it moves its arms, the reactions, that's all training an artificial intelligence model, so that in the future you could have those exact robots in that exact setting without being teleoperated. The only way that they're going to learn how to do that on their own is either to go through a teleoperated training data set or put it in a simulated data set like they have at NVIDIA. NVIDIA has robotics simulated data sets. But we have to train the robots. This is not an easy process, guys. Training robots to basically think like humans and act like humans and engage with the real world environment around them is not an easy thing. That's going to take years. But it will happen. It will happen. And eventually we'll have generalized autonomous robots that can do anything. You can drop 1,000 robots in a company, and the foreman could be like, I need you to do these tasks. And they'll be like, okay, can you show us how to do them so we know exactly how to do them? Like, yeah, my crew will show you how to do them for an hour, and then I want you to do them with the other 20 trucks. And they'll just go to work. Like, that's going to be, like, you won't have to train them more than that.
How does Google's quantum chip fit into this? Is this a part of the equation where their chip could somehow power these like way faster and make them way smarter, or the two separate?
I think they're separate, but the concept of quantum computing is super interesting when we think about just generally how we're going to advance artificial intelligence over the next decade and a half. And the quicker we advance artificial intelligence and robots go hand in hand. Remember, this is called embodied AI. It's the embodiment of artificial intelligence. There's no doubt that quantum computing, once we start to commercialize it, will further advance artificial intelligence, not just to be generalized, but to be super artificial intelligence, right? So to have artificial intelligence that's actually smarter than humans. And when you combine that with autonomous robotics, you can really have wild things happen right on Earth. To me, what we can achieve with this is just wild. Yeah. So as an investor, remember something, guys. I have never seen a point in my lifetime where we have pulled forward revenue as investors as aggressively as the last 4 years since the pandemic. So what I mean by that is when we have industries emerging, as soon as we start to see that this industry is developing and it's going to happen, we start to look at the revenue it will produce, like with NVIDIA, and we don't have to wait 10 years for that company to grow into the valuation anymore. That valuation gets sucked forward, which is kind of interesting as an investor. So if you can catch something that's really large, it has a large total addressable market. Like physical labor is about 1/3 of global GDP, believe it or not. And some people think that once we have infinite physical labor, that physical labor could be larger than our GDP today in 15 or 20 years. So this is the largest industry on Earth, theoretically. Not even theoretically. It is the largest industry on Earth. And if we crack the code, which we already have, it's just a matter of engineering, scaling this out now, Wall Street's going to catch on to it very quickly. And I think they're going to pull forward those revenue models of what does it look like when you're printing millions, tens of millions, hundreds of millions of robots, and they're being leased out at these rates because the value of the bot is that big. You're going to have companies that are massively larger than today's companies. That's why when I'm not like a Kathy Wood. I don't normally throw out big numbers like I threw out in January when I said Tesla could be a $10 trillion. Just their Optimus division could be $10 trillion by the end of 2030. I thought about that tweet thread a long time before I hit the button to send it out. I was like, no, I really believe this. I really believe that is real. And at the time, Tesla was like a $400 billion company or 300, 200. It was like at its low. I really believe that. And I think fast forward a couple of years, the concept of having these $10 trillion companies is not going to be that spectacular anymore or that seem that obscene. But the TAM is huge. The total addressable market is gigantic.
How much does it affect it if the overall market right now is very expensive? When you look at it objectively, I mean, the market, the PE ratio is only been this high in like the 1920s, 2000s .com bubble. Yeah. A lot of people do say that we're in a bubble now and the market is too expensive and that it's overvalued. How does that play into all of your thesis? Or is that even something to be concerned about?
Yeah, I mean, it's definitely possible. It's really, we're living in a very difficult time to assess what's coming in like 24 months, which is crazy. Like if you went back 15, 20 years ago, we can tell you exactly what's coming in 24 months. You could look at all the technologies and you could be like, there's no way this technology is going to grow more than this much in 2 years. Now, try to assess the next 24 months. Do you have a clue? I can't even imagine. Nobody knows what's going to happen in the next 24 months. So we're living in a period of time where technology and innovation are accelerating at such a rapid pace that it's become almost impossible to predict what our world is going to look like in just 2 years' time. So could we be in a bubble? Yeah, we could be, but we could also not even remotely be in a bubble when it comes to some of these new sectors, like AI, robotics, right? If you think about the concentration of productivity, like what happens to a company like Amazon if they have infinite physical labor? Just what happens to a company like that? Amazon works off of very small margins. What happens if they can operate at meaningfully higher margins? Like, could you imagine? Like, Amazon could be 10 times the size it is today. So we could be in an overall bubble. There might be a lot of companies that get crushed because of this new world, that don't survive it. We did an episode on Dumb Money where it was like talking about all the SaaS companies, software companies. We're like, will any of these survive? Could we see a day in like 10 years where all the big SaaS companies basically go away? Like DocuSign and Salesforce, the list goes on and on. Will a couple of these companies innovate with AI so aggressively that they become, valid companies in the future? The rest of them just go away, and all this gets wrapped up to a very small number of companies. Like, look at what's happened in the last 5 years. A small number of companies have assessed all the market cap. Does that continue? Maybe. If so, maybe both things are right. Maybe we're in a bubble for a lot of companies, but for other companies, we're nowhere near where they're going to end up in like 10 years.
Where does Bitcoin fit into all of this? And what is your thought on it?
Man, Bitcoin is one of those things. I'm always a guy. It's like, I'll never pretend to like know everything. And I've thought so much about Bitcoin over the past 10 years. And I always come to the same conclusion. I just don't know. I don't have any thesis on Bitcoin except for one. And it's a strong thesis, and it has nothing to do with the viability of Bitcoin or whether it should be higher or lower, or whether it will actually be meaningful to our society over the next 20 years or be completely irrelevant. My thesis revolves around the fact that the young generation does believe in crypto and Bitcoin, period. Whether they should or shouldn't does not matter as an investor. They do. In my generation, we had gold bugs, and I always made fun of them. Okay, I was actually sitting next to Steve Forbes a couple months ago at lunch, and I was making fun of gold bugs to the table, completely forgetting that he's the biggest gold bug ever. I was so embarrassed, and we had a laugh over it. But I was like, and I told him, I was like, Steve, the gold bugs used to be weird people. You're a weird. I told him, like, you're a weird guy, dude. Like gold bugs have always been weird old guys. They're like with these, and they're like, oh, inflation, blah blah blah. I was like, now it's not weird to be a Bitcoin guy. In fact, it's cool to be one. It's generally accepted. In fact, the entire young generation are all crypto guys. I speak to them every day, right? So you're going to have what, 80 trillion, I've seen numbers as high as $115 trillion of wealth transferred over the next couple decades, 2.5 decades. As that wealth gets transferred over, it is undeniable that a decent portion of that younger generation is going to choose to have some portion of their portfolio or their wealth, either directly if they're managing it themselves, or their wealth manager is going to do it for them, who are also young, because everyone's younger, right, in the next generation. And now that we've institutionalized these products, I don't see how Bitcoin doesn't continue to massively grow just as a result of wealth transfer and nothing else. Nothing else. That's my thesis. That's why I'm aggressively invested in Bitcoin. I'm still worried about the safety of Bitcoin, right? The security of it. Willow is like one example. It's not unsafe now. It's not unsecure now, but things are going to happen over the next 10 or 15 years to keep it a secure asset class. I'm also concerned about regulatory, but right now the regulatory environment looks good. So unless that changes, that's not a concern for me. So right now, all I know is that every year, more young people are going to get wealthier, and more older people, I hate to say it, are no longer going to be holding their wealth, right? They're going to, what old people do, they get older and then they go away. I mean, it's just the reality of our lives. And is that not the only thesis that matters at the end of the day? Yeah. So we don't have to overthink Bitcoin.
So how could somebody watching follow in your footsteps? Where would you recommend they start?
I mean, I have that old book. I think my publisher pays me like $0.25 every time they sell. It's out of print now, but you can still buy them on Amazon. It is still a valid book. It's Laughing at Wall Street. It's named my book from 2010. Obviously, we have Dumb Money Live, my Twitter account, Chris Camillo. But I've done so many podcasts like this. I've done so many interviews. If you want to go down the social arb kind of rabbit hole, there's a ton of content on social arb out there now. Honestly, my favorite is the chapter that Jack Schwager wrote about me in Unknown Market Wizards, which is a book that's come out every 8 or 9 years about the top traders in the world. He wrote a 34-page chapter about my style of investing. And in that chapter, he did a better job explaining what I do than I can explain myself somehow. He's just a better writer, I guess, than I am. So you can read about social arb trading, but at the end of the day, you just have to start. Just do it. And here's my biggest thing I want to talk about. The biggest thing that separates those with a lot of wealth from those that don't have wealth is risk capital. People don't think they can afford to have risk capital in their life, and that's just wrong. So like in 3 years, I turned 20,000 to 2 million. That's 100 times your money. Now, not everyone's going to be able to do that, but you can do that over 20, 30 years. Definitely. But you could only do it if you are aggressively investing that money in things you really believe in.
What's the difference
Leverage
between
money.
that and gambling? That's where my mind goes.
It's not like everything that we talked about. Did it sound like gambling, or did it sound like intuitively paying attention to the world?
I think there's a big difference between you, who I think is way smarter than
I'm not. I barely
average.
Graduated high school. You got to remember that. I told you that. Like, I'm not.
I think, well, here's the difference, is that I think you look at it from a very logical standpoint, and most people do not go in with the passion that you do for finding those opportunities. Most people go in for the sole purpose of getting rich as quickly as possible, while operating on fear.
Yeah.
And it's the fear of, I don't want to lose my money, or I'm going to fear of missing out on this, and I'm going to go and throw my money in that. Oh, no, it didn't work. Sell. Or something's going up. Oh, I don't want to miss out on that. Buy.
All I can say is there are people that have been following my story now for 12 years, following us on YouTube for 8 years, that are just regular people. Some of them are UPS drivers. Some of them are dentists. Some of them are, homemakers. Every profession in my community. And I've watched them literally over years go from being totally intimidated by investing or like doing all the stupid stuff to now just finding things in their everyday life that they are like, this is a big deal for this company, and then putting a lot of money in it. And they text me all the time. They DM me. They're like, Chris, you're not going to believe how much money I made this year. I literally, for the first time in my life, I made half as much money from my brokerage account than I made from my real job. I'm like, I know, I remember, I was there. And then one year you're going to make more, and then you're going to be like, how the hell did this happen? You were just a regular Joe, and like 12 years later, you're making hundreds of thousands of dollars a year from your portfolio. I know for a fact that any human on earth can do what I do, because I've seen it not just from me. I've seen it amongst all these normal, regular, just normies that have done it. Watch YouTube, don't watch the guys that are hawking stuff on you, but like actually watch people that talk about real things on YouTube. You watch me, just do it. It's not hard. I'm reading my book if you want. I mean, just do it. Just start investing. The thing is, you have to immerse yourself in this world. There's nothing more important. Guys, there's nothing more important than being part of the investor class for one's financial life. It's not an option. It's not like, should I start investing? Oh, it's not a question. You better darn start investing right now. You better go get a Robinhood account or get whatever, right? Just start doing it. I promise you. Don't do anything stupid. No meme coins, none of that stuff, right? Just invest in companies, live your life, start connecting dots, start looking for trends, start looking for like, how is culture evolving? How is consumerism changing? Like, we as normal people have our like feet in the real world in a way that people on Wall Street just don't. We see things before them. The market is rigged in our advantage because we can see the world changing in a way that people that work on Wall Street just can't. They're reading data that's weeks and months old. We're seeing it evolve in real time. And just start doing it. Make mistakes. Lose a little money here and there, right? No big deal.
So what
You'll
then?
get better.
to you separates the people that are successful at investing versus the people that fail at it?
You just have to have a long-term mindset. You have to know that you're not good at it. Have you ever been good at anything when you first started? But at the end of the day, as long as you're putting money in the market and not doing crazy, weird stuff, I don't know how I literally don't know how you lose over the long term. Like if you're not doing weird, crazy stuff, I don't know how you freaking lose at this game. It's just a matter of how big you win. And the more you do it, the more aggressive you get, the more comfortable you get. We're like, you know what? I just made all that money because I saw that this Apple phone was going to be a big deal and no one else realized it. And next time I'm going to put more money in. Next time I'm going to add a few stock options. I'm going to learn how to do stock options. I'm going to put a little bit of leverage in, right? You have to bucket your money. That's the big thing. Nobody knows how to bucket their money. If every individual on earth needs to have a big money account where they take money that is not their retirement, not for vacations, not for education, take money that they ordinarily would have blown on something random, right? And say, you know what? Is it worth me clipping a $2 coupon? Maybe not. But if you look at that every dollar like $100, if that $2 coupon is $200, is it worth clipping now? See, I think of every dollar like $100 because I know I can take that dollar, invest it aggressively like rich people do, and grow it 100x over some period of time. If you think like that, all of a sudden you find yourself clipping coupons. All of a sudden you find yourself mowing your own grass because you're going to take that money that you save by mowing your own grass and you're going to put it in that big money account. Not your normal brokerage account, but an account where you get to invest like wealthy people do, not worrying about it, not worrying about losing it, right? Maybe there's a startup. Maybe there's a guy from your college or from your work who's really smart and doing ambitious things. Look for those people in your life. Are they starting a company? Go start hanging out at your local startup accelerator, listening to there's people in life, they're out there doing crazy things, right? They're just working harder than everyone else. They're taking big risks. They're starting companies. Every major city has like an incubator where you can go listen to founders talk and you could start meeting entrepreneurs. Just like meet them. Just maybe you start investing in startups, hit one startup, that could be 200 times your money, right?
Yeah.
But that's the world that anybody can be in if they want to be in it. You don't have to be wealthy to be in that world. You don't have to invest. You can just start hanging out with those people and speaking to them. Meanwhile, you're mowing your own lawn, you're clipping coupons. And instead of I always say hey, you want to buy the $800 TV? Would you wait a year and instead of $800, I guarantee that TV will be $600. $200. I'd rather have the TV this whole year. But what if that $200 is $20K now? Would you wait a year? Well, I'd wait a year for $20K. All of a sudden, you're going to start delaying purchases to save a little bit of money. So all the stuff that you talk about doing becomes a lot more interesting. Like a lot of people might look at the stuff that you do and be like, Graham is too frugal for me, man. I'm just not doing it. I don't care about saving $1 here or there. But if every one of those dollars is $100, all of a sudden they start doing all the stuff that you say to do. And you know how you have all those YouTube accounts of people talking how to save money in a million different ways? That all of a sudden becomes really appealing if every one of those dollars is $100. And if you take that money, I call it other people's money. It's money that was never yours. You were going to spend it or you're going to give it to someone else, but you made a decision to get your hair cut every 4 weeks or 5 weeks instead of every 3 weeks. You save a little bit of money there, but that money goes in your big money account. And that money you use to aggressively invest. You're not like investing in the S&P 500. You're investing in individual stocks or maybe a little controversial. Maybe you invest with leverage. Maybe you invest on margin. Maybe you buy.
Earmuffs, Jack.
Tell me more.
But here's the thing.
How can I borrow even more?
But here's the thing. If you're borrowing money that's part of your retirement account, maybe that's a problem. If you're borrowing money that's in an account that's designed to be high risk, high reward, right? I have that account. Like everyone should have that account, even if it starts with only $5 in it. Because it's shocking how quickly that account can grow over time. Shocking. Believe me, I've seen it, not in my own account, but like in all these other accounts and people in my community. And like, I don't do coaching. I don't generate, you know this, I don't generate any money from my community. I don't do any of that stuff. Like I don't sell a single thing to anyone. I'm just like, dude, I'll tell you what I'm investing in. If you share your ideas with me, I'll share them with you. And by the way, I made more money from YouTube. People don't realize this. I've made more money from YouTube than almost any YouTuber, but I make no money from YouTube advertising or sponsors. I've never taken a sponsorship. But the ideas that I get from my community on stocks, I've probably made $40 million from. You know, so it's like I extract value out of the ideas that people that watch our channel and comment. It does sound kind of weird, right?
Yeah.
But like the community is what I make money off of, like their ideas.
Honestly, your enthusiasm gets me so pumped up. Like we're filming this right now. It's midnight.
I know.
It's midnight.
I'm ready to load
Monday,
up a Robinhood account right now.
on a Monday night, and I'm like pumped right now.
Wait till you see the robots, man. When you see the robots, you are really going to get jacked. No, I want everybody, listen, if there was one word of advice I'd have for people right now, it's do your homework on robots. Do your homework on humanoids. Just do your homework. Watch the videos. Just do your homework. Go out. Don't listen to me. Spend 30 hours just researching humanoid bots and watch the channels. There are a few really cool like YouTube channels that are tracking this stuff. Watch them so that you're mentally prepared if and when you choose to make an investment in whether it's Tesla for their humanoids or some other company.
Could you do us a favor? Could you send me the best resources that someone could look at for humanoid robots? And we'll
link them in the description.
Link them in the description. Michael Saylor gave us a whole bunch of resources that people could look at for Bitcoin. And he listed them out. Like, go look at this and this and this and this and watch this video. We'll link to that in the description and just make it easy on someone that if they want to learn, just tell us the best resources that the average person could just go read or watch or listen to.
Done.
Something.
These guys are my friends. I'll list them for you. Yeah.
Thank you.
Absolutely.
I'm curious how you balance doing all of this with also having a family and 2 kids.
Oh, it's easy because like you have to remember that this is I trade on this. Like I don't have screens. I don't study finance. Like I just have fun with it. Right. So it's like, it's the easiest, social arb trading is the easiest thing in the world to do because I can do it in the middle of the night, right? I told you, after my kids go to bed, at 10 is when I do most of my research, like 10 p.m. to 2 a.m. I'm not totally consumed. I don't read the Wall Street Journal. I don't watch CNBC. I'm not on stock boards and stuff like that. I don't trade. I don't have to I don't care if the market's open or shut. Like I don't even check my account some days, believe it or not. People are like blown away by that. I'm like, there are days when I don't even check my brokerage account. In fact, one thing I suggest everyone does is try to go 3 days without checking your brokerage account. It is the greatest thing you'll ever do in your life. Just go 3 days. Don't check it. You might be up, you might be down. You don't need to look at your stocks. You don't need to do it. Occasionally you do, but you really don't need to do it. Like with my type of investing, there's nothing that's going to happen day in or day out that I need to be looking at my stocks.
How often do you check your brokerage account?
Multiple times a day. But in fairness, I wake up and it's my routine. Before I get out of bed, I buy stocks. I buy index. Basically, I buy 3 ETFs every morning in the same amount, no matter what, before I get out of bed. And then I like to check them throughout the day.
You're
I've been doing
pouring
that
more money into
years.
equities, which is like the most genius thing anybody can do. Like if you just do that alone, in fact, we should do a whole episode sometime about the triple leveraged the ETFs because we did an episode years ago on this and we did a ton of research and we have a really strong thesis on this that it might actually be the best investment that anybody can ever make over long term.
It works when it works and it doesn't when it doesn't. That's because I've looked into the same thing. There's like a 2x because technically the best investment over a 20-year time frame was like a 2 to 3x leveraged S&P 500 and the drawdowns were significant, but the upside was massive. But my point being is that like maybe there's a theory over the next 10 years if we see a stagnant market or a lost decade where we see decade over decade minus 10% from where we are today, that is going to crush you.
Yes, that is true. That is true. But generally the concept is if you have a lost decade and you're continuing to contribute to it over
Correct.
that time period, that when it eventually comes, so it's all about time. It's all about duration, your time duration, right?
Yeah.
And it's only right for people that have a ultra long time duration. And I think there's always going to be some level of risk reward, but if you have a designated bucket for that, you understand the tail risk involved with that, and your duration is really long, and you don't want to spend the time to stock pick, there's something about that, because if you look at the history of it, it's fascinating.
I could see that potentially making sense if someone's in their 20s, not planning to retire until 60, and they're disciplined enough not to sell and to keep contributing no matter what. And like you said, basically just not check their account, but just like every month throw in whatever they do.
It's not a total portfolio of philosophy, right? It's not something, you don't want to have your whole portfolio in that strategy, but there's something really interesting in it as a way to supercharge returns with a bucket of money. I'm kind of fascinated by it. And I'm also a true believer in just like the asset classes over the long term. Yeah, there are some scenarios like Japan and whatnot where you have lost decades. So there are risk factors, tail risk. Anyway, but
I'm just ultra conservative. Like
I know
I buy treasuries. I have the tax-free muni bonds. I incorporate everything in mine.
But do you have, Graham? Do you have a high risk bucket?
No,
that's a problem. That's a real problem.
I don't think so. I'm happy. Just like if I could just lock in 5% a year, I'd be thrilled. For the next 20 years, I'd be set. I'm so happy with that.
But you don't know the degree of happiness of having a high risk bucket. It's so fun, but it has to be bucketed. You have to be able to bucket it separately. So you have to develop a different mentality around what that bucket is for.
Well, for me, that's a Bitcoin ETF. Okay. So that I guess is my high risk bucket, but I see that as like a 20-year. It could go to zero, or it could be something. But I like the Bitcoin ETFs. It's very easy. I buy in.
Risk capital is magical. It's the one thing that I paid attention to my whole life, and I look at all the wealthiest people in my network, and so many of them have done nothing but have risk capital. That's all they've had.
Could that be survivorship bias?
Perhaps, yeah, and that's an important factor. But risk capital is almost a necessity to building great wealth over some reasonable period of time, and obviously it's what you do with it, right? But if you don't even have it, it's like you're not even in the game. So I just think it's really important for people to find a way to have risk capital and to properly bucket that as risk capital and not intermingle the risk capital with other capital in life.
What percentage? Like if someone, let's say hypothetically, has $1 million, that's their net worth between a house, savings, 401k, investing, taxable, like what percentage of that should be allocated to risk capital, in your opinion?
Yeah, I would never answer a question generically because every individual is totally different, right? So it's like when you say $1 million, you can have a person, the answer should be 0 in that case. In other cases, it could be 50% because every person has a different level of a different objective in life, right? Like, I'll give you an example. Like, for me, I have a very strong objective to build $1 billion foundation for pediatric cancer, leukemia, and autism, right? And so for me, it makes sense for me to have a very large risk capital bucket because it's the only way I'm going to achieve that life goal. Another person like Dave, for example, I tried to get Dave to put more money into one of our robot companies. I was like, I don't understand, Dave. You have all the same information that I have right now. Why are you not putting more money? And his answer like really threw me off, and it made a lot of sense. He was like, I don't know what I would do with the money. He's like, why would I put more money at risk when I get no benefit from having the additional capital if what we think is going to happen happens? Like, I wouldn't do anything with that money. I have no objective for that extra money, Chris. So there's no reason for me to even do that. And I was like, it reminded me that we all have different like goals, and like we all think differently. Like, he has zero need to build wealth beyond what he already has. He just wants to live his life. I told you, he's not here. He's in Africa. Yeah. You know, he's just having fun.
Great life.
He has a great
stress-free,
life.
happy, travels, wakes up, No kids.
No.
Just could sleep in every morning. Just a very low-key, just nice, friendly.
Meanwhile, when he went off to Africa, I had to drive 4 boys to a Zach Bryan concert in Tulsa, which was a 5-hour drive in the rain last Friday night. Got 2 hours sleep because they kept me up all night throwing Crocs in the room over my bed, and then at 6:30 in the morning drive them home because a couple of them had
Dude, you could have had a
session.
robot do that for you.
I know, right? But like that's the difference between my life and Dave's life, like polar opposite. But you know what? I loved it, man. I loved it. It was ridiculous, but it was chaotic. I still not recovered from not having sleep that weekend, but
how do you make sure your kids don't grow up spoiled?
I think about that every day. That's the one thing I think about more than anything else. Wealth destroys lives if it's not properly managed. I do not want to steal that from my kids. Like my greatest moments in life, I have a picture of me and my wife with our first washing machine and dryer. And I remember that like it was yesterday. We were so proud that we can afford to buy our own washer and dryer. We got it from like Costco. It was a photograph of it. And then like her parents got us a mini washer and dryer, like miniature thing that we put on the shelf. I was like, how stupid was that? But like we were so happy. Like buying that washer dryer set was so happy. I was like, there are so many kids that will never experience the joy of making a purchase like that because by the time they're like 18, like, what? Like, I'm just would have that, right? I was like, I never want to steal that joy from my kids. So I will never give them anything. Like, honestly, like that's my goal is to like, now I don't get to choose that because when you're married, you don't get to like unilaterally make choices. And so I have very strong opinions, but I'm only half of that decision, right? My wife. So like we haven't quite figured it all out. But the one thing I love that I think a lot of people don't appreciate are charitable foundations. So all these people that have trust funds that are managed by attorneys and you have to be managed, all this BS. Like the magical thing about having a charitable foundation is you can grow it as large as you want. It will never go anywhere. It will always grow, and it grows tax-free, which is super cool. And you're allowed to take a reasonable compensation for managing the foundation, for allocating the 5% that has to get distributed every year, and for choosing, you know, what mutual funds it's in, right? Yeah. And so you could allow your children to take over a charitable foundation that you've set up, and they legally can only take a reasonable salary for the rest of their life and health insurance. Legally, if they ever take more than that, they can go to prison. So it's like this beautiful thing that exists that I think is a really good tool if you want to ensure that your kids are not going to go destitute, that they can have health insurance, that they can kind of take a reasonable salary, but probably not nearly enough that would keep them happy in life. And it's something that they don't have to do as a full-time job. They're still motivated to go out and build a life for themselves and build careers, to generate real money for themselves and learn how to invest, but they do have somewhat of like a backstop there, right? Yeah. And my big issue, guys, is that it's not like it used to be. I think the future generation of the haves and the have-nots are no longer kids that just worked really hard and got into really good careers. I hate to say this, I think the future generation of haves and have-nots are the ones that inherit the most. Because when you look, going back to that conversation about the 80 trillion, now some people are saying 115 trillion because the inflation keeps popping up. When you think about either getting a few $1,000,000 or not getting a few $1,000,000, that's the difference between the next generation of kids that are either living this life or living this life. That kills me. It never used to be like that. Never. There were the kids that had like trust funds were like far and few between back in my day. Like I didn't even know anyone that had I remember I met the first kid that had a trust fund when I went to SMU. No surprise, right? But even then, there weren't that many kids at SMU, which is like one of the wealthiest schools in the country, that had hedge funds in my circle. Now, like I look at my neighbors, like in my neighborhood, which is a really nice neighborhood, and I like hear a lot of the parents talking about trust. I'm like, do all your kids have trust funds? Like, what the fuck is going on? Like, is that like just normal now? And I'm starting to realize that like, it's not even just a trust fund. Like the inheritances are insane. Like think about how many people are multimillionaires now, like just regular people in Ohio, just through the appreciation of their house. Okay, so your parents either have a house that's worth 1.2 million and you're going to get that value, or you don't. Like that could be the biggest differentiator for the next generation. That's very weird.
I think a lot of that's going to be sold for end of life care. Depending on how long people live, medical ailments, maybe not.
I don't think so. I mean, yes, some of it will be. Some of it will be. You're right. Some of it will be. But I'm not quite sure that much of it will be, because we still have health insurance. Like there's still insurance, right? So that does take care of most end of life care. Maybe not as good as some people would like it to be. I think we're entering a new age of have and have nots purely based on class system, based on the degree of inheritance you get when your family dies. I think about this all the time. And the reason for that is I've always had this thought that I would give my kids 0. But like, if I give them 0, am I real? Like, it's not like it used to, because in my world, it's like you work hard, you get a good job, and you build your life slowly over time. That's the environment I grew up in. But what if that doesn't exist in 20 years? You know what I'm saying? Like, what if that doesn't exist? And like the majority of people in America are getting some level of inheritance, and I was too rigid. You know what I'm saying? Like, so you have to kind of factor all that stuff in, and it's a lot to think about when you become a parent, because it's a big decision to make. You don't want to ruin your kids' lives by stealing joy from them of achieving things on their own. But if the world is changing and like our economy is changing such that it's normalized that everybody has a starting point that's here, because we all started here. Yeah. We literally all ramen noodles, like, dude, my first apartment was like $400 something a month. Like I literally didn't have a car for a while because it broke down and I couldn't fix it. I was taking buses to work, like that's how it was in my day. Like, but that's just not how it is anymore. And as much as I hate that, that's just life. So you can't fight the truth. And so maybe there is a starting point that is a reasonable starting point that you should think about allowing or permitting your kids to start at that starting point. Is that an inheritance? Is it a trust fund? Is it taking over a foundation where they can earn income? I'm still trying, we're still trying to figure it out. We don't have the answer yet.
One thing I've found is that a lot of the parents that are wealthy that we have on the podcast, their kids turn out so well when the kids start working for the parents or under them, different jobs or careers, and the parents put them to work. Like your children, you could have them come up with their own investing strategies.
Yeah.
Give them, hey, you get $1,000 because you helped me on this thing. You earned $1,000 from this. Figure out where to invest it. Let's do it together. Oh, you lost it. Where did you go wrong on that? How could you learn from that? Like Ben Malla's kid, such a stand-up act, and he's like working with Ben on these properties and like being there with contractors. Or Grant Cardone's daughter, my gosh, Sabrina, she's going and speaking at his gigs and like, doing sales calls. It's like, it's really impressive what he's kind of thrown her into this, and she loves it.
They also seem to have a lot of interest in that, though.
Oh, that's true.
And I think it would be hard to.
Okay, I was going to say that.
Yeah.
Guys, that's my dream. I would love to do it with my kids so much. Yeah. You have no idea. Like I see Grant Cardone, and I'm like, oh,
they got a great relationship.
I was like, by the way, like I have an awesome relationship, but it's not that. And maybe they're 14, right? Maybe that's too early, and I don't want to push them too hard because, like, I feel if I push them too hard too early, they will revolt against it. And so, like, I want them to come to me if there's ever a point where I can engage with them like that professionally. Especially as it relates to investing. You believe me, I think about all that. I want it really bad. But I listen, I also pushed them to watch Goonies when they were way too young, and they were like, they didn't love it. And I'm like, oh, we pushed on them too young. I should have waited a couple more years. So like now I'm really careful to like let them live their life and let them pursue what they want to pursue and let them come to me. And I would love to have that day.
They're probably the best trendsetters out there. Like whatever they're into, chances are if they get in early enough,
yeah.
Lastly, what is the secret to a healthy and happy marriage?
Oh wow, that's a tough one. Man, I think you're always still trying to figure it out. Like I don't think anyone like ever has the ultimate answer. like I've been married for a long time, and I have a lot of friends who've been married a long time and a lot of divorces. And I feel like you're always just trying to figure it out. But I would say what's really important is you have to find peace with yourself. You know, like you have to find peace with yourself. I think you got to work more on yourself than your marriage. I think if people are working on themselves and they're happy, intuitively happy, and they have a sense of purpose and they have like a positive, happy life for themselves, I think it makes it a lot easier for you to like come together in that way as a marriage. Because you could focus on all the relationship stuff, and that's important. But I think a lot of the core problems come from they're internal problems that one of the people in the marriage have, right? So you both have to support each other and like pursue your own thing, whatever that means. It's like it's different for every single person, right? But a lot of the people I look at that have had failed marriages, like I realized that like they were not in a good place themselves. Like forget about the marriage part, because you can never get in front of someone in between someone's marriage and know what's happening. But the individual person was not in a good place.
Was it one or both of them?
It could be one. It could be one. I think you both have to be in a good place, right? So like if you have one person that's not in a good place, that could destroy everything. But I don't have all the answers, guys. When it comes to that, is like the hardest question. That is such a hard. Like I've always like pride myself to say like to not pretend I know things that I don't know. And I honestly, I still like, in addition to my own relationship and stuff, which you're always working on, it never ends. You're never like, hey, we're good in perpetuity forever. It's always like, you're always working on it. I watch, because I'm on TikTok so much, like I watch a lot of relationship TikTok, like a TikTok of the sexes, you know, a lot of male anti-female TikTok, a lot of female I don't know what it is. I love watching it. And I'm just like, gosh, there's just like, I don't know how to solve this problem. It's a huge problem right now.
Humanoid robots.
I think expectations too.
Yeah.
I think if I had to answer your question, keep your expectations reasonable for humans.
That's fair.
Just humans. I would say one thing I'm really good at is I have great relationships with my friends, like going all the way back to high school. Like my wife she's like, I can't believe you're still so close with all of those friends from high school and college. They're like, some of them are so crazy. And some of them, I'm like, you know what? I accept them and I have reasonable expectations from my friends, right? And a lot of times women will have expectations for their friends that are like here that can never be met. You know? Like I think having reasonable expectations for your friends, for your spouse, for your kids, for your business associates, and not like expecting them to do things that are just unreasonable. Because like we're all different at the end of the day, right? Like a lot of this conversation has been like, we don't all think the same. We don't all want the same things. I can't tell you what to do with $1 million because your million might have a very different objective from your million. Because you might want very different things from him. He might be like, hey, if I'm not a billionaire, I'm not happy. If I'm not on my way to becoming a billionaire, I'm not happy. You may be like, I don't even want that. So like you can't have the same financial plan. Everyone's financial plan needs to be totally different. One thing I do like for people in terms of financial plan, I only manage one person's money in my whole life. It's my parents' money. And I love this concept. Nassim Taleb talked about it a little bit. I think it was like Black Swan, but it's this barbell theory of investing where you don't ever invest in anything in the middle. I know you're in lots of middle stuff, but like you literally only invest in two things. You invest at the opposite spectrums. So you have extreme risk assets, which are basically just growth equity, high growth equities. And then you have treasury and nothing else in between. And the concept is that everything that sits in between has a tail risk that the market underappreciates or doesn't fully acknowledge. Meaning there's always going to be some event that we can't anticipate that has the capacity to take down municipal bonds. We just haven't seen it yet, right? There's some tail risk event that could take down everything in the middle. So why don't we invest the money that needs to be safe in the safest thing that we know exist.
Like a COVID or something
treasury,
like that.
A treasury is going to generate this much interest, right? And then you invest the rest of your money in the world, continuing to go on like it always has and growing, which would be growth assets, growth equity, right? Technology.
Yeah.
And as long as we don't have some weird thing happen, that is going to continue to grow excessively. And then this is going to be what it is. So the only decision you ever have to make is how much I put at this end of the barbell and how much I put this end of the barbell. What I love about that, it's not good for me, but for people like my parents, they don't have to think about anything. The only thing they ever have to think about is at 7/30, 60/40, 50/50, 40/60. And as you age, it becomes more, as your timeline gets smaller, maybe you shift more of it over here.
Yeah.
Right. And it's like, it's the simplest money management, like wealth management strategy that nobody ever does. Nobody does this. Everybody overthinks everything and overcomplicates it. How much should I have in bonds? How much should I have in this asset class? How much should I have in real estate? How much, like, what if you just stuck with the safest thing in the world and the least safest thing, asset class, and just invested in those two things?
Yeah.
And all you got to do is configure how much goes in each thing. I love it for like a certain type of person.
Love it. Well, thank you so much.
Yeah, this has been an incredible
Tony Hawk.
episode.
This has been
Tony Hawk. Thank
Well,
you so much.
how about
Alright.
Jeremy Piven? I
Jeremy
got this week,
Piven.
right?
Thank you so much for coming on. We really appreciate
We're definitely
this.
going to have to do a part 2 because I do want to talk about those leveraged index funds. Absolutely. So
Earmuffs, Jack.
They have white papers on it. You can go deep.
Oh,
you can
gosh.
go
Yeah.
really
We'll link,
deep.
we're going to link to everything down below in the description along with your YouTube channel as well.
This is fun.
and the
Thank you
resources
so
that you
much.
said to learn.
Yes.
Yeah, absolutely.
Everything is going to be in the description.
Robots.
Thank you so much.
Till
Like,
next time.
subscribe if you haven't done it already, and until next time.